All right, it says excellent connection. We are live. Let's go ahead and get this started. Welcome back to the channel, Crypto Trend Trader, with our Sunday evening market outlook. Before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Okay, great. So, yeah, we're going to jump right in with the technical analysis. Take a look at our traditional assets. As far as the stocks and commodities, the various indexes. We'll look at the DXY, TNX, and quite a bit of other things, as well as our cryptocurrencies. So obviously we've had quite a bit of volatility lately in some stocks, a lot of cryptos, and then also we're seeing a potential, break out or push up in some of the metals as well. So it's important that we keep our, keep everything under wraps. Don't feel that FOMO, and make sure we have those key levels to look out for. You will also notice that, today, obviously the title and also the, picture on the video and everything pertaining to Elon Musk. And, I find it a little bit curious, the situation obviously going on, title being government regulators or mafia criminals. And then obviously a reference to the SEC investigation / indictment of Elon Musk. That is not a new bit of trouble that he's in. I'm referencing the 2018 issues that he had when he was tweeting. And at the time when they actually filed those, I found it like kind of funny. He had like 2 or 3 million subscribers on Twitter at the time. And now he has 63 million Twitter followers. So obviously he has come quite a way since then, back in 2018 when he got in trouble. And now, it seems like the SEC and some of these other financial agencies are basically doing nothing, letting people like him or not, Elon Musk, Dave Portnoy, and many others just go rampant on Twitter, and essentially the equivalents of like securities fraud. So if you're not familiar with securities fraud, just looking at the little definition of it, securities fraud, also known as stock fraud and investment fraud, is a deceptive practice in the stock or commodities market that induces investors to make purchases or sale decisions on the basis of false information. So, I mean, is that a clear and defined, way of saying someone is like demonstratively like guilty or not guilty? No, I mean, it's very subjective, like most things that the government does. But, you could argue that if they were going to go after Elon for the actual tweet that he made back in the day, was saying that he was going to take Tesla private potentially at $420, and then ended up not doing it. And they're saying he didn't have any arrangements to do it. And it resulted in a 6% move in the price. Think about how many people have tweeted with millions and millions of followers in the last couple months or a couple years that have resulted in greater than 6% moves in a stock. Like what about Hertz? Hertz tweeting out that they had a deal with Tesla that resulted in, 25% move in Tesla and over 50% move in Hertz. What about, Dave Portnoy going on live streams, last year and pulling Scrabble tickers out of a hat live, and then everybody rushing in together and buying stocks? Like, I mean, those are clearly like intentional, like manipulations of stock market. I don't know. It blows my mind. We've watched basically the SEC and other government officials just sit back while basically just everything went out of control this year. And that's great. A lot of us benefited from it. But at the same time, just because we're benefiting from it doesn't mean we should look the other way when the people that are supposed to be in charge, when the regulators and the people that are paid for by the citizens and taxpayers sit back and get rich themselves by either doing nothing or intentionally, going out of their way to look the other way. It's absolutely out of control. You see them basically go after Elon a few years ago and, try to pull like a little shakedown on him, try to curb his company or whatever. You know, now that he is the richest man alive and billionaire, you know, they're not going after him. Does that have something to do with it? Are they building all these cases behind the scenes? I suspect they probably are. I suspect that they're probably building a bunch of cases against a bunch of these top people, just so that they can get their shakedowns. And I refer to the government as basically like, you know, mafia, like crime syndicate, because that's what they're really looking for. They're not looking to put any of these people in jail. They're not looking to shut down the companies or anything. They're just looking for the shakedown. They just want to, you know, a little crime happens around your spot. Maybe you get a little charge, a little letter. You start getting a little worried. They show up, you know, they talk to you a little bit, offer you a little bit of protection. Oh, I'm sorry, you know, did your front window get broken? Is there a lot of unsavory characters hanging out around the area? Do you have some fines that you don't want to have to deal with? Are regulatory industries, you know, kind of shaking you down and making you nervous? Is it causing damage to your business? Oh, you just pay us a little fine. You know, we're not even gonna go after you in court and completely stick the charges to you. You pay the fine. We drop the case. You know, everything's cool. There's no guilty on your part, no admission of guilt. Therefore, you know, everybody just kind of walks their other way. We get to grease our pockets a little bit. You pay a little bit of that juice to the government. Everybody goes about their business. So, I mean, at what point in time is this quote unquote government, you know, agency or regulatory body just like legitimately a mafia like shakedown? I mean, it's borderline already that. Like, you could argue that it's actually worse because, you know, most of these mafia guys might be threatening you with violence, but at least they're not going to come and, you know, lock you up in jail. It just blows my mind. I think it's absolutely ridiculous. You know, I definitely think some of the things that Elon Musk has done in the past is shady and borderline illegal, you know, but at the same time, so what? Everybody else is doing it. So, you know, at what point in time do I think they're going to come after him? Do I think they're going to hit him with some more fines, you know, come and get their bribe? Sure, I'm sure they are. But at this point in time, you know, you could argue that they let these people get away with it. You know, Tether's a specific example. You know, they just hit Tether with like what, $42 million fine? What, I mean, how much Tether is there? There's like $74 billion worth of Tether. So a $42 million fine on a $74 billion, you know, company or whatever. I mean, it's absolutely ridiculous. You know, they've been asleep at the wheel on a lot of these things forever. I mean, obviously they pick and choose who to go after. You know, they pick winners and losers, and you know, that's not what this is supposed to all be about. So just wanted to talk a little bit about that and just, you know, some of the frustration and shadiness that's going on, especially like on our government, who's supposed to be like the trusted regulators. You know, obviously we have a bunch of insider trading with Congress, with the Federal Reserve, you know, presidents, chairs, etc. It's the corruption at this level is just absolutely out of control. Absolutely out of control. You know, and it's just become like so evident over the last like year or so. It's absolutely pathetic. We need like a complete like house cleaning of, you know, not even just in the United States, but all over the world, all these like politicians and regulatory bodies and, you know, government agencies. It's just out of control. I hope that in some point in time in our future, that we, you know, gain back the power for the people. And, you know, before it's too late and we completely submit to this absolute corruption that's running wild. So, well, let's jump into some technical analysis. Obviously had a nice little pushback up on Bitcoin, kind of like reclaiming some key levels, but let's just work down the line here. So we'll start with the 10-year treasury, TNX. Had a nice little pushback up a couple days ago and then just kind of went sideways. At this point in time, it looks like it's going to reclaim the 821 cross back to the upside. And once again, going to try to come back up here and threaten the you know, higher end of the range. Obviously quite a bit of resistance at like that 1.7 level, but if we do get through like 1.75, I expect this thing to just shoot straight up, as that is like the key resistance, the previous high for this run since we bottomed out back in March 2020. And you know, we've discussed this area for quite some time. This area right here where we had a bunch of sideways price action is where we expected to run into a bunch of resistance. So I do think it's going to take a little time to chop through this. But after that, you know, the next, we're just stair stepping our way up to like 2. And then next thing you know, 3. It's going to definitely take some time to get there. But I do think we will see at least 2% relatively soon, if not 3 before long. And you guys know that that's my overall target. So TLT obviously has reclaimed the 200 exponential and simple, attempting to hold those levels, obviously had that big sell-off, and now it's just sitting on top of the 200 exponential. So again, just waiting to see what happens. It does look like there's some weakness here. Momentum in its favor, but the stochastics are rolling over. So, it's at basically an inflection point, decision point for, treasuries and yields right now. There's a strong argument for yields going lower, and there's also a strong argument for, treasuries going lower. Either one results in the opposite going higher. So U.S. oil, you guys know how I feel about this. As far as I'm concerned, we basically put in a temporary, at least double top right here, came down and touched the 236 of the pushback up off the 200 exponential to the recent high, came back down, basically confirmed that this was a viable Fibonacci retracement, came back up, put in a lower high based on wicks, or essentially same high based on closes. And now we're selling off, getting ready to cross the 8 and 21 of the TJD master to the downside on the daily. At this point in time, I do expect this to come back down and retest the previous peak and also our 382, roughly somewhere around like that 76 level. We'll see also stochastics are pointed down here, and also momentum is pointed down. The blue slope line is still there, but it looks like it is getting ready to roll over red, and we go into a sideways or downward trend, at least short term. Dow Jones, obviously, we were looking at this blue support that we have been, basically holding on. When we broke down from it, we found support at our green box area right here, which is the top of the previous trend. This has been going on for like 100 years, at which point in time we double bottomed there and got our pushback up to the upside. We have been unable at this point in time to reclaim that blue support level, but as far as I'm concerned for now, nothing has really changed with this. It does look like we're going to go into a little bit longer of a consolidation period, but I would expect like that 3470, was it 34,793? So basically 34.8 to hold. We are seeing obviously a hard sell signal and some momentum building to the downside, but I don't expect anything like ridiculous at this point in time. We've got a couple levels to watch here, but we'll just pay attention to them. I would expect any kind of retracement to be more of a sideways or stair step down, not expecting a crash at this point in time. And for all the people that are out there talking about, crypto is going to crash, or stock market's going to crash, or whatever you're going to say is going to crash, until something actually changes, there's not going to be any actual changes in the direction of price. So if there's going to be one single event that, results in the top of cryptocurrency or stocks or, insert whatever asset here, the chance of predicting that to the day or the week or even the month, let alone, a year even, is very unlikely, because there has to be some definitive big event that changes market sentiment. It's very clear at this point in time that there are more buyers than sellers. So in order for the market to go down consistently, there needs to be more sellers than buyers, and then that needs to stay that way for quite some time to start building momentum to the downside. There has been only momentum to the upside for literally like years since this all started. So at this, and most of these assets are designed to only go up, really, with the exception of small pullbacks and sideways price action. The design of these is to go up. So in order for there to be some kind of reversal or top or crash or whatever, there needs to be some big catalyst for it that shifts market sentiment. So as long as people feel like there's a Powell put in place, basically like a bottom on price action in the stock market, people will continue to do what they're doing, what they've been doing. The psychology of the market is not changing, has not changed, and it will not change until something changes. And the difference between, the Federal Reserve buying, $150 billion a month in assets versus buying $135 billion this month in assets, that $15 billion is not going to be the make or break for this market. And you could say, well, at the end of December, though, there'll be another 15 less billion that they're buying. They're still going to be buying $120 billion at the end of the year. Every single month they're buying that. So by the time this, and Powell has specifically come out and said they're going to see how these first 2 months go, and then they'll readdress if there's issues. Well, people are like, well, what they mean is they might buy less if the inflation keeps getting worse. He didn't say that. He said they'll readdress if there's issues, basically. So what he might be saying is, if we start seeing pressure on stocks and whatnot, then we might just pull back the pullback and just keep buying 150. Or maybe we'll keep buying, whatever. So let's not get, aggressive one way or the other that he's going to, stop the taper or, you know, accelerate the taper. He didn't say either one of those things. All they're worried about right now is stability in asset prices. It's very clear that the dual mandate of the Fed really just means, who gives a fuck about inflation? Let's make up whatever we need to do to keep these markets propped up for as long as we can. You know, and Powell's up for potential re-election in January. Who knows what's going to happen with that? Maybe that's the catalyst. They announced Lil Brainer. Maybe they announced someone else. Maybe that's the catalyst. But until we have an actual catalyst, you know, I mean, market's just going to keep mounting up. So S&P, same thing. We had a very clear support level right here, broke down from it, hit our target perfectly. And then now we have basically all but reclaimed that level. I would just expect further upside. We are seeing a little bit of pressure, a hard sell signal coming out of the bullish control zone, multiple red histograms. So definitely some short-term weakness. I would expect like sideways, what amounts to a bullish reset until something gives us reason to believe that we'll actually see a legitimate pullback. The Russell 2000 has went sideways for the entire year. Finally got a break of that zone. Came down here, put in a little bit of a pullback. I would rather see it come back down to the breakout level at 2,347, at which point in time, if that area holds, I would expect further upside and our price target measure move of the channel to play out. If that does not hold and we get a pullback and it breaks, you know, that's not going to look good. And again, it looks like we are getting ready for at least a short-term pullback or sideways price action. IXIC, Nasdaq, very similar. All these indicator oscillators looking the same way. Again, broke down from a key level, came back down to another key level, found support at the top of our ascending triangle breakout, you know, perfectly. Got our completion of the measure move, and now here we are showing weakness again on our indicator oscillators. So it looks like overall this week is probably going to be a sideways to down week overall for the stock market. But what does that mean? Does it mean we have to actually go down, or is a sideways to down week just mean we have 3 or 4 days of sideways to down action and then just one random candle that erases the losses? That's probably it. XLB, so material sector, obviously looking strong to the upside. We did get the breakout of that overall descending triangle. We are halfway through our measure move with our target of 94. You know, I do expect it to get there. This is still looking very strong. We are showing a sell buy, and then eventually when this tops out, we'll see the sell signal again. That is going to give us our divergence signal. Very similar to back here where we get the sell buy, and then we sell and leave the bullish control zone. And that was the macro top of this move that resulted in, you know, what amounts to a pretty nice pullback. So that's what we're paying attention to as we are looking for that divergence signal. But that will not take place until not only do we have to get the sell signal, but we have to leave the red highlighted zone. So we see sell by sell and then the breakdown of the 80 level. And then that will result in our divergence signal that will give us, you know, what amounts to a macro top. You know, and in this case, we had a lower high that corresponded with it. And then we saw the pullback. So don't want to get ahead of these things. But typically, if you do see a higher high after that signal prints, you're going to see some divergence in the other indicator oscillators as well. In this case, we had the lower high that corresponded with the lower high, but the divergence signal on the TJD Jewel Thief. So XLC communication, much weaker. Once we got the breakdown of the support level, we basically just been going sideways to down. Now the 200 exponential and simple are catching up with us. Didn't quite get to our target yet, but we are starting to build some momentum to the upside. This looks like it is going to try to put in a bottoming pattern and then probably see some slight upside potential. Maybe something like a 5 or 10% move, you know, in the short term. That is communication. XLY, we have the consumer discretionary. We overshot our move slightly. We had our measure move to the upside, rather conservative measure move. Got a nice little push above that. Now we're coming down. We're seeing the hard sell. We're seeing a bunch of red histograms. It does look like it wants to, you know, basically go sideways. It's pinched between the 8 and 21 for now. I would expect this to just be range bound for the short term, but a pullback down to like 190 would not be unrealistic. Actually, probably desirable, as if that level holds as support, we would have basically our SR flip, build a new base, and then continue to the upside. XLE energy sector, obviously we're seeing some weakness because of oil. We saw like some pullbacks in some of the other you know, energy as well. And then again here we see the print of the sell by sell, exit the bullish control zone. So that is our divergence print. We're seeing a bunch of red histograms. We've broken down below the blue slope line. It is still blue for now, but it does look like it wants to roll over. We are in between the 8 and 21, just kind of going sideways, range bound for now. But I would expect a small breakdown from this. You know, we could get a sharp breakdown all the way back down to the 200 exponential and simple, but I think that's much less likely. I think we're much more likely to come down to like that 55, 56 level before once again seeing continuation to the upside. I think energy will stay strong throughout the holidays, throughout the winter, etc. XLI, industrial sector. Again, we were range bound inside of this channel for quite some time. We had a false break from the bottom or a failed breakdown attempt, found support at the 200 exponential and simple, and also our green box buy area, moved all the way back to the top of the range. We have technically broken out of the range, come back down for support, and it looks like this wants to see continuation to the upside. We are still inside of the bullish control zone. We do still have momentum in our favor for now. We're seeing a couple red histograms, but we did stop that with the green one. We're above the slope line, and it looks like at this point in time, we do want to get some continuation and potentially the measure move to play out with the target up here at like roughly 112. And that is industrial. XLF hit our target. Basically, we were expecting a target between the 1.5 and 1.68. After we fell just slightly short of the 1.68, hit that red box area, and now we're just seeing a slight downtrend. I'd be looking for essentially continuation on this temporarily. We have lost the red slope line. We're seeing only red histograms. We have the hard sell, and we have left the bullish control zone. I wouldn't expect a heavy pullback on this, but a pullback to some of this previous support at that double top back in August seems more likely than not. Probably somewhere around like that 38 or 39 level would not be. Yeah, that's what I'd be basically looking for. XLK technology sector, very strong, basically just back here at all-time highs, slightly below the highs. We're getting the hard sell signal still inside of the bullish control zone though. Looks like it wants to just see continuation. A couple red histograms followed by a green one. Still have momentum in our favor, still above the 8 and 21. Looks like we will see continuation to the upside. Yeah, looks strong, very strong. Now rates obviously could change that quickly, but as far as now, XLP, consumer staples, back here retesting our previous little double top that resulted in the pullback to the 200 exponential and simple, where we had the green box down here, got the hard buy signal, seeing momentum to the upside, still very much inside the bullish control zone, retesting those previous highs, running into that temporary resistance. We do have momentum in our favor as well. And the TJD TDMACD, we have the blue slope line, and it looks like we will get the completion of our measure move break from the channel to the upside, at which point in time I would expect this at least to see a temporary top somewhere around like that 74, 75 level. Measure move of our channel. We have the retest of the breakout. This thing is trading very, very technically. Probably just going to chop through here for a little bit and then see that continuation. XLU utilities, basically just getting walked up by the 200 exponential and simple, not seeing any like super aggressive moves out of this. This is obviously more of a conservative play when there's a little more like indecision or fear in the markets, which we are not necessarily seeing right now. Still very much a risk on market environment. We do have the histogram well above the slope line. Looks like it is going to basically cut sideways here for a little bit and then flip this over blue, at which point in time I would expect continuation to the upside. We are seeing the hard sell signal on the stochastics for now, but we're basically moved back down to the neutral zone, and this looks like a bullish reset to me. We've seen the stochastics move all the way to the upside, and now they're selling back off. They're 50% of the way back down to the bottom of the range, and we have basically pushed up the majority of the way back that move, and now we're just basically going sideways here. So I would expect the next move to eventually be to the upside, although it doesn't necessarily have to come right away. XLRE real estate, looks like we are putting in at least a temporary double top. We have broken above the 1.236. I am still optimistic for real estate to see continuation to the upside, but we are starting to see some pressures in the markets, starting to see those rates rise on like the housing loans, starting to see slowing down of some of the housing metrics. So we'll have to see how that plays. Obviously, the winter season is not typically the most bullish for real estate sector, but there's obviously distinction to be made between new housing starts, and builds compared to actual housing prices. We do see some potential damaging things in the market. The Evergrande default, obviously that's an international situation, but many of these corporations and industries have their hands, their little spider webs all intertwined. Also seeing like the blow up with Zillow and the dumping of a few thousand houses. And while that's not a big deal on the grander scheme of things, it may be potentially like a canary in the coal mine situation, as if a large company like that could be a problem with the way they were doing business, which wouldn't surprise me, could also be a sign of the times. I think they basically started doing that with the assumption that prices would continue to just go to the upside, and that is not the case. In many cases, we're seeing markdowns or even just like leveling out of the housing market. So, in a market like that, you can't afford to be overpaying for something, especially on a large scale with a, big company that does not have the same interest as somebody who's purchasing like a single house to do a flip or something like that. That's potentially adding actual value versus just looking for a quick buy and then a quick sell to make the difference. So we are seeing the housing slow here a little bit, potentially double topping. Do want to see this area hold if we're going to stay bullish on this. We're still well above the slope line, but it has flipped over red, saying that we are losing momentum to the upside. So while we're still above the zero line, we're still above the slope line, we are seeing only red histograms. We're getting the hard sell signal coming out of the bullish control zone on the stochastics. Still maintaining the 8 for now. We don't want to see a breakdown below the 21, and especially not a cross to the downside. But if we do, we would expect this to come back down and retest somewhere around the 200 exponential and that previous low. And start to just carve out a range somewhere around like 44, 45. XTN transportation back here at our cycle highs. Let's keep in mind that this is overall, I think this will remain strong going into the holiday season. You guys know how I feel about transportation. It typically tops out at the beginning of a year, sometimes multi-year cycles, but typically somewhere around like January to March. So while we are losing a little bit of momentum right now, we did have some powerful moves to the upside. We are breaking out of the highs and potentially could come all the way back up and retest the breakdown level while putting in a new all-time high. So because the amount of time that we went sideways on this metric, it would not be unrealistic for me to think, let me just stretch that out a little bit. Would not be unrealistic to think that we get a push back up all the way to like that 127 level or something like that. It's very common for you to basically break down from a long-term channel, go sideways or down for a little bit, and then actually move back up, put in a new high, but fail to reclaim that channel. And this channel, again, was something we were operating inside of since like the March lows. So once we break down from that, everyone gets very bearish. We find support at a key level, 200 exponential and simple. And while we are slowly losing momentum, the 200 simple has crossed over the 200 exponential. Not unrealistic to think this pushes back up here. We potentially put in a new high and some bearish divergence, rejection from that level, and then see the longer pullback over the next, few months to year. So hail, we have the breakout of our descending triangle. Obviously we have the measure move of the triangle. About half of that has played out so far. Potential like 20% move. We're about 10% of the way there. We have reclaimed the 200 exponential and 200 simple. We were losing the slope on this, but with that powerful move to the upside, looking good. Now we do need to be cautious here as we are seeing that divergence signal developing. So I never like to see this if I'm expecting continuation. We have a sell by sell. We have all but exited the bullish control zone. This is our divergence signal telling us that there is a divergence in the price action in comparison to the indicator oscillators. And what does that divergence tell us? It tells us that the current trend is unsustainable. So why does that seem realistic? Well, we had a very strong push up in Avis recently, short squeeze, whatever you want to call it. We had a very strong push up in Hertz as well with that Tesla news. So is it possible that this is a fake out or a unsustainable breakout, just basically out of a pattern, but still putting in a high, followed by a lower high, followed by a third lower high, or a double top off of that previous high? It looks very likely to me. I think that this is a very unsustainable move, and I do expect I expect downside targets for this. I would much rather see, if this is going to get continuation, it needs to have a strong pullback, consolidation that lasts for not just a couple days, but literally weeks or so, and then see a slow grind higher. This to me does not look sustainable. We're seeing, reasons within the indicator oscillators as well, that this is going to amount to a potential double top pattern. Now, if I'm wrong, if we come back up here and we take this high out, it's going to look much more bullish if we take this out. And then again, if we take out the all-time high here, it's going to blue sky breakout continuation. But I would not be surprised to see this topping out sometime in the near future, and then a continuation of the overall downward trend. And this was basically just a short squeeze. And again, I would expect things like in the transportation sector specifically, whether it's, jets, whether it's hail, whether it's UPS, FedEx, etc., all to strengthen through the holiday season, and then see pullbacks, come the new year. And some of those pullbacks may be extreme and last for a long time. So here we have jets basically have been finding support at this green line the whole way up, and we are continuing to do so as expected. I do expect this line to hold in the event that we do get a breakdown from this level. The double fib level bounce back to the 0.5 seems reasonable. But again, you know, this is all going to be determined by like the travel, by the restrictions, by, you know, any issues that happen with these airlines, etc. You know, if we have a bunch of pilots not showing up, or a bunch of, you know, workers not able to work for various reasons, whether it be by choice or by mandate, you know, that can obviously result in, you know, issues, bottlenecks, etc. With these. But overall, I would expect essentially the pricing to make up for the lack of volume. But let's keep in mind, this topped out back in 2014, and I do not expect the airline industry to recover anytime soon, possibly ever. And then also let's remember too, we just got essentially what amounted to a double top here. We are still below the 200 simple moving average. We are above the 200, technically we're below 200 exponential as well. And both of them basically have a flat slope. So it is not unrealistic to think that we chop around here, see some up and down movements, some zigzags, and then eventually just see a capitulation move on this, which is what I'm expecting long term. Starting to get a little tired on the stochastics here, but we are above the slope line, above the zero line, and the slope is blue. So momentum is technically still in our favor. So this level should continue to hold. We have multiple levels of support here with the moving averages, with the ascending green support line, and then also our Fibonacci as well. So while I do overall think that this will go down, I think right now we have more favors that would push this to the upside. So UPS obviously hit our measure move to the upside off of the 200 exponential simple, you know, pullback here. We came back, and I mean, this thing has been trading extremely technically. We were expecting it to come down here and fill the gap to the downside. We did exactly that. We left a gap to the upside. After that, we came back up and filled that as well. And now we have left a small gap here. We filled the majority of that gap. You could argue that we need to come back down and fill that little bit too. As far as I'm concerned, this gap has been filled. We are seeing a hard sell signal. We are back inside the neutral, you know, area. We have only red histograms. We're well above the zero line and still have blue slope line momentum in our favor. As far as I'm concerned, this is just going to chop around through resistance, and I do expect higher highs on this. Do we get a smaller or medium pullback? It's definitely possible. But as far as I'm concerned right now, this is very bullish, and I expect it to be even more bullish through the end of the holiday season. They have already said that they're not having some of the issues that other, you know, distributors / shipping companies are having, FedEx. And also they have already said that they're willing to raise their prices for excess volume, especially from, you know, large retailers once they have met their overall like average quota, etc. So things like Amazon and, you know, other large companies going to have to pay a premium for shipping, you know, if it becomes an issue, if they exceed shipping volume, etc. So I do expect further upside. FedEx still looks okay. We did get our completion of the initial measure move, the 12% trade setup. So far, there is a larger trade setup in play here with potential for 20% move back to retest the 200 exponential and simple. This one is obviously looking much worse. As we see, we had a top back here, a higher high here, and now we're still well off those highs. You know, another like $70 or so, another 20% basically, as opposed to like UPS, which is already revisiting those highs. That makes sense. FedEx has been having, you know, they've been very clear that they're having serious issues with some of their routes, drivers, etc. You know, there's all kinds of reasons why this is taking place. Overall, I think it's a worse company, so does not surprise me. But again, still bullish on it till the end of the year. We have a small gap right here. Nothing to write home about. Don't necessarily think that we need to come up and fill that. But I do think that we do reach this 20% target here. So momentum in its favor inside the bullish control zone. Still looks strong. Still looks very strong. Let me jump over and chat here, and we will keep on ripping. What's going on, Spike? Keystone in the house. Good to see you, my man. Hey, home for a live stream. Yeah, good to see you, my brother. Let me know where you guys are at, where you're watching from. What's up, Mr. Lex? Been a while. Appreciate the compliment. Good to see you. So let's go ahead and let's continue with our traditional assets, and then we'll rip into the crypto and the commodities next. So next, looking at the DXY, obviously been bullish on the DXY for some time. Now the rest of the world is somehow managing to come around. Don't have to tell you guys that though. We have clearly put in a double bottom or bullish head and shoulders, like inverted bottoming pattern here. We are back on top of the 200 exponential and simple on the daily, and we have taken out our previous high from back here on the way down, and then obviously we have taken out all our highs on the way up. So we are literally currently putting in highs for this rally off of the lows back here in January of 2021. I do expect continuation, but we do have to pay attention to this. There is quite a bit of resistance through this levels, as it took literally years to chop through this stuff and move to the upside. I do expect it to take some time to kind of chop through and do the exact same thing. We have a previous top right here. We have a couple of bottoms right, at that same level as well. So as far as I'm concerned, these are key levels worth paying attention to, depending how you want to draw them exactly. Basically these next couple percent, we would probably see some serious resistance. We also have the resistance of the top of the ascending broadening wedge that we are paying attention to in red right here. So again, we're at like the top of the range right there, potentially, looking for a short-term sideways to down action, and then just keep grinding higher. But we do have our measure moves in blue right here, the smaller one up here to 96, the larger one up here to 98. And we are seeing that reflected obviously through some of the other, countries' currency weakness, corresponding with the dollar strength. But obviously all these currencies are weakening compared to assets, as the majority of them are just going parabolic. And now if we just look here at the monthly, I'm going to skip right over the weekly. If we look here at the monthly, we'll see obviously I'm very bullish on the dollar. We are well above the 200 exponential and simple moving average, and they both have slopes to the upside now, implying that we will see a long-term continuation move of strengthening of the dollar. And while I am overall macro, bearish on the dollar long-term, we could easily see a 1, 3, 5, even 10-year extremely bullish move to the upside on the DXY before we see, its loss of status as world reserve currency. This thing has been the world reserve currency. It will continue to be the world reserve currency, and it will not happen overnight when that transition takes place. So all the people that are saying the dollar's dead and this, that, and the other, and there's going to be a new world reserve currency and America's dead, sure, eventually, whatever. But right now, no, it's not going to happen. It's not going to happen overnight. We have the hard buy signal coming out of the bearish control zone. That is a strong indicator to the upside. We have bullish momentum, bunch of green histograms in a row. We are at the slope line. It is still red, but leveled out. Once we break through this, we're going to flip this over blue, get through the zero line, and then we will see that momentum last for literally years. From back here when we started, the blue flip was in November of 2006, and we didn't flip it back over red and start the actual downtrend until June of 2017. So that was an 11-year monthly bullish uptrend. And the previous one before that, just from where this actually populated on our chart here, was in, August roughly of 1991. And again, we didn't flip that back over red and start the downtrend and top out until December of 2001. So we had a 10-year bullish period in the dollar, and we are getting ready to enter into a very similar signature on the chart. So are we going to get another 10-year period on the dollar? Maybe not, but maybe we are. So make sure you're positioned on the right side of that trade and not listening to all the dumbass people that say that the dollar is dead and it's going to lose its world reserve currency status, because regardless what their little fundamental argument is and what they want to say about whatever, the charts are telling us something very clear. And the last two times it told us that same exact thing, it was a 10-year period of people being idiotic and on the wrong side of that trade. So make sure you are not that dumbass. Remember also, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. All right, so Tesla, let's see how Elon's doing. So obviously we got the measure move breakout of our channel as expected. Once we took out this previous top right here, the C of our descending triangle, we expected obviously a move back to the top of the range and breakout measure move to the upside, at which point in time we tagged perfectly the 1.618, almost like Elon Musk is using technical analysis, or maybe the richest man alive can pay someone else to tell him when to do certain things, whether it's his tweets, whether it's his sales, or whether it's his Asperger's. There's something behind the scenes helping this man out. He is the richest man alive for a reason, and also a troll and very good at it. So his brother obviously was able to sell the top perfectly, as was he able to announce his quote-unquote tax event. If you were in the trade group, obviously you know that I was speaking about this before it was mainstream, how Elon was going to have basically a $10+ billion tax bill due, at which point in time he jumps on Twitter, says blah, 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 should I sell some Tesla so that I can be a good guy? And Twitter comes on and says, yeah, sell some Tesla and pay some taxes. Well, regardless, he was going to sell some Tesla and pay some taxes. Now you just feel like you are, part of the argument, little, tree-loving hippie libtards. I'm sure most of them probably not invested in Tesla, but just want you to, fund their illegitimate children and make sure that they get their free little like $300 in government subsidies. But regardless, that's cool. We need somebody to breed and make all the slaves that are going to pay for all this reckless spending in the future. So, I'm glad that you're willing to volunteer your children as the slaves of the future. So anyway, we got our top out here on Tesla, getting our nice little pullback. Elon has sold roughly a third, 33% of the 10% that he is basically planning to sell to pay for that tax bill. So, can you extrapolate this by 2 and that's going to be the pullback? Is that aggressive, etc.? We don't know. We don't know what kind of liquidity it's going to have in the markets. We don't know how much of the option-driven FOMO is going to get crushed by him actually selling. But our initial target to the downside is 900. At which point in time, I think it's realistic to think we could come down as low as like 780 or like 750. But I wouldn't get too aggressive with that. We do see once again the divergence signal on the Jewel Thief, the sell by sell. We have left the bullish control zone. That was the absolute top. Once again, this thing has worked absolutely beautifully. We'll see here as well. This is the opposite divergence signal, the buy, sell, buy. And that was the absolute bottom right here. So you can see, how well this divergence signal works. The tighter these three, flips are to each other, the more reliable the signal is. So if they're spaced out real far, it's kind of like, it could go either way. If you see them tight like this and there's only like one little, tick between them or 2 ticks between them, it is extremely, extremely reliable and one of the most reliable signals that I like to use. I love this indicator. If you're not using it currently, highly recommend you go on TradingView and get it for free. If you're not sure how to find it, you can just look at the description. Everything but the moving average TJD master is offered for free for non-group members. So we obviously see momentum flipping over here on the TJD, TDMACD as well. A bunch of red histograms. We're down here where we would expect at least a temporary bounce. But, if Elon continues to sell, that could cause a pressure to just break straight through this. But I would expect basically a little sideways to down action, followed by an attempted move back to the upside, lower high, and then continuation of the move as the indicator oscillators reset and Tesla goes to the moon. Discovery, spoke about this one last time, and our entry, this thing has been going down forever since the Archegos blow up. This is a legitimate company. They had their earnings call, and overall, it was whatever. Basically, the surprise was an extra 3 cents, which is 7%. Of the 39-cent estimate, they reported 42 cents earnings per share, and then we see obviously the surprise on revenue, 3.15 billion, and then the estimate was 3.15 billion, but it was a miss of 294 million, 0.01%. So literally nothing. And now we see a breakout of a long-term pattern, this descending wedge. This is typically a bullish pattern to the upside. Now, when I say it's a bullish pattern, I mean when this pattern breaks, we expect a bullish move. Does not mean that we're going to put in new highs here. Matter of fact, it's going to be very, very difficult to ever take out this high right here because it was driven by, basically Archegos owning a large, large percentage in the company that is, obviously illegal. But at least in the meantime, I do expect the remainder of this 24% move to the upside, the retest of the 200 exponential, and then eventually potential move up here to the 200 simple, the 382 or 0.5 of our Fibonacci targets, 46% to the upside. We have momentum in our favor inside the bullish control zone, 821 and flip back to the upside. We are overall still in a bearish downtrend, still in a bear market, but very often what happens is when we can go from, we entered a bull market right here, 200 exponential and simple, flip to the upside. We expect continuation, goes absolutely parabolic. We eventually get the reversion to the mean, which is the retest of the 200 exponential and simple. We break down below it, go into a bear trend. This flips over here. We're technically inside of a bear market once both these are angled to the downside as far as my definition. And then eventually we get the reversion to the mean, the push back up, retest, and then depending what happens there, does it fail? We see continuation to the downside. Do we reclaim these levels and then see continuation to the upside? No one knows right now. But typically what happens is you just see that reversion to the mean happening over and over again. And that is the play that we're playing in this. This is a counter trend trade, so it is more likely to underperform or less likely to perform, but overall still capitalizing on those gains. Uber next, similar situation, and you can see how consistent I am with my technical analysis. Turn into a uptrend right here. We go from $31 to our top at $63, literally over 100% move to the upside. Break back down, reversion to the mean, 200 exponential and simple, consolidate, break down from it, reversion to the mean, push back up, attempt to reclaim those levels, at which point in time it looks like it wants to roll over and continue the bear trend to the downside. So as far as I'm concerned, we have a small gap back here at $40, and overall this does look bearish. If we are able to reclaim like this $50 level and consolidate long enough, sure, Uber probably goes higher, but do I think that's going to happen? No, I think the trend will probably play out. So next we have Pinterest. I'm actively in a trade on Pinterest as discussed. We took our entry here, basically still at the entry price. We have the hard buy signal coming out of the bearish control zone. We have momentum. It's basically flat at this point in time. We have multiple green histograms, but we're still below the slope line and zero line. This trade has worked out quite well for us a couple of times now. So we'll see if it happens again. We obviously capitalized on a 20% move back here, capitalized on a 32% move back here, and perfectly called the top back here at $85. So going to potentially, make that same trade again, back up, reversion to the mean, a retest of the 200 exponential and simple. We could arguably say that already happened, and now this is going to underperform, but we're looking for that gap fill back here at like $58 as part of this trade as well. Do we have to fill the gap? No. We see here we had the breakdown from $71, and then we came back up and we're unable to fill the gap slightly. You could argue we came close enough. So maybe we get the push back up here, fill this gap. Maybe we don't and it fails. Maybe we get the push all the way back up here and close the gap. We'll have to wait and see. But if we use probability, risk management, and, basically risk reward trade setups, the probability of success extremely high, or at least consistent over time. And that's what we're looking for. Consistent gains over time. We want to eliminate large losses. We want to allow our small losses and our small wins to cancel each other out. And when it's all said and done, the only thing left is big gains. And that's what we're in it for. Looking for those big gains. Them big, thick gains. So Snap is next. Snapchat, obviously another one of my current trade setups that I am currently involved in. We see we're right here at my entry. We have the hard buy signal potentially coming out of the bearish control zone, bunch of green histograms in a row. We are still well below the 200 exponential and simple. And once again, I'm looking for that reversion to the mean play. Obviously, we're inside of a bull trend for quite some time. We got the breakdown and left a massive gap behind, basically leading up to this earnings call right here. We were expecting that. Called that out. I was expecting the gap fill right here. We blew through it. So now what I'm expecting is the move back up, 15% move to retest the 200 exponential and simple, potentially a move up for our trade setup as high as 40%. Not quite from this entry, but if we do get a little bit lower, but essentially something around like 25 to 30%, and the potential gap fill, that we left behind. The attempt to revert that mean on the 200 exponential and simple, which I do think eventually will result in further downside. But gonna make some money on the way, hopefully. Peloton is next. Obviously, if you guys saw the Peloton technical analysis right before this video, I was calling for a breakdown from our descending triangle. We did in fact get the breakdown. We did in fact get the majority of the measured move to the downside, hit our target almost perfectly within literally days of the expected move. At this point in time, I am waiting to see what happens here. I do expect continuation to the downside as this sort of just like melts down, but I'm looking for a potential entry somewhere around like that $36 to $42 range, somewhere around here. I have to wait and see what the price action looks like, but eventually I do think we'll come back up here, fill the gap, get the retest of the breakdown resistance, or was support, act as resistance, and then see, where this wants to go. But we are well below the 200 exponential and simple, and obviously inside of a bear market. And we're seeing quite a bit of that taking place. Just a reminder that many of these stocks, especially tech stocks, are in fact in a confirmed bear market, even though the, indexes are continually just melting to the upside. Airbnb obviously hit our first target 15%, hit our second target another 15% off that entry point. We have reclaimed the 200 exponential and simple. We are now retesting up near the top of the range here. I do expect continuation to the upside. Very strong right now. Could take a little time to chop through here. But as far as I'm concerned, I obviously had some quote unquote insider information, nothing illegal, but, I have a couple of friends who are very involved with, Airbnbs and, seeing their numbers and their demand and everything for the previous quarter. I was expecting a strong beat, which we did in fact see from the company that resulted in this powerful move to the upside. But we'll see what the next quarter numbers look like as, once again, my buddies are telling me that things are slowing down a little bit. Granted, we are a very seasonal location, and obviously this is a, big company all over. So maybe they don't reflect the overall status of the company, but I think we did have a lot of pent up demand. Basically got the push all the way back up to the breakdown here, saw that act as resistance, and then got a push back to the top. Is it possible we just come back up here, top out again, and then just chop around in this range? It is 100% possible. I mean, if you keep in mind that this was, basically when they started publicly trading, and this was our top, what are we really? We're really just range bound. we see basically a triple bottom right here and a potential for like, what amounts to a double top right here. So at that point in time, it just looks like a giant channel that we're going sideways in. And I would not be surprised to see that be the case. So, but you guys know how I feel. I am a conservative investor. I look for nice trade setups and I take profits early and often at defined levels. I would rather lock in those gains and buy back higher once we get confirmation of continuation in the direction of the trend. Zillow is next. Once again, been talking about Zillow way before anybody else was and how I expected this to capitulate to the downside. Once again, broke down below the 200 exponential and simple, entered into a bear market back here in August. Basically chopped around sideways, got the reversion to the mean. I expected a rejection and lower high. We literally underperformed and didn't even make it back up to 118. This is when CNBC was saying, excuse me, let me clear my throat real quick. This was literally when CNBC was saying, buy Zillow, it's going up, buy the dip. It's down off of its highs by, it was at 208 and now it's at 85. This is an amazing opportunity. This is a great company. It's going to the moon, blah, 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 blah. Then proceeded in a couple percent move back to the upside and then a capitulation move. Keep in mind, Zillow was at $210 and it is now at $60 as predicted, as expected, as openly announced on this channel. Zillow is down 70% from its high. 70%. This thing is getting absolutely crushed. So is it undervalued now? Was it overvalued before? Is it a combination of the two? We have to wait and see. We have to wait and see what happens with this thing. We are at a key level that I would expect this to find support. I'm potentially going to enter a trade in this. We have already hit my downside target perfectly. But at the same time, we could easily see continuation down to the 618, closer to like $48 or $50. At which point in time, I would definitely at least take a stab at this for a potential reversion to the mean and gap fill. I do have 2 trade setups in place, but I have not entered yet. 31% potential to the upside or 75% potential to the upside. Same target on those, a retest of the 382 and a gap fill. But the question is when and if we take off to those levels. But as far as I'm concerned now, bears are clearly in control. We're well below all of our moving averages. We are well inside of the bearish control zone, and we're seeing only red histograms and momentum to the downside. So I am not ready to just catch the knife on Zillow. Next, we have Wish. I am obviously in the Wish trade. You see my entry here is basically slightly below where we're at right now. We can see that the 8 and 21 are potentially going to cross back to the upside, at which point in time I'm looking for that same reversion to the mean trade. Potential back up to fill that gap once again at close to $10, or potential reversion to the mean of the 200 exponential and simple moving average closer to $12. This is a nice risk reward ratio as we have a 6.5% stop loss if we take out the low back here with a potential 82% move to the upside, giving us a roughly 7 to 1, 6.5 to 1 risk reward ratio. And then finally, if we get the larger move back to the upside, that's going to give us 140% move to the upside with that same stop loss in place. Or is that same stop loss? I can't. Yeah, okay. Same stop loss in place with a okay, I don't think I actually put the stop loss in here, but 6.5% compared to 140. So basically something around like a, what is that? 140 divided by 6.5. What is that? Is that 20? God, my brain is fried today. Yeah, I mean, roughly. But yeah, still, optimistically bullish on this, but we are well below the 200 exponential and simple. Again, this does not need to be the bottom, but we did see multiple drives of bullish divergence. Once here on this push down compared to our low here, and then we saw a higher low here on the TJD TDMACD, resulted in a lower low. So we have some bullish divergence between those 2 points, at which point in time we came back up to a key level. We were unable to break through that level, which is the previous low, the previous resistance. But now we have come down and put in a higher low here. We have momentum in our favor, and we have the buy signal coming out of the bearish control zone. We are getting ready to or about to cross the 821 back to the upside. So I think this thing is likely to get a short squeeze or powerful move to the upside in the very, very near future. And again, we're looking for an 82% move on this one. Could it fail and go down to a new low? 100% could. And that's why risk management is very important, or position size management is very important on this, but I am cautiously optimistic on Wish. Next we have Bumble. Obviously, if you saw the previous Bumble video, I was calling for the breakdown of our triangle. We have quite a few nice little trades work out on Bumble in the meantime, but I literally made a video about why I expected this to break down. The measure moved to the downside, and literally the next day or 2 days later, we got the capitulation move. We got that just violent dump to the downside. It was over a, what was that dump? Just from the breakdown to current price action, over 27% move to the downside. We are inside the bearish control zone. Obviously the measure move has already played out, but I'm not looking to just jump right in. It was a huge 403% surprise. I mean, it was only 5 cents per share, but they were expecting 1%. So big miss right there. And then on revenue, it was 1.83 million surprise in a good way, which was 1%. And then, of course, if you watch any of the interviews or the conference, earnings call or anything, the CEO of Bumble was just, let me put it this way. I don't like how she handled herself. And, we'll leave it at that. She just seemed cocky. And, in my opinion, if you are the, CEO, owner, whatever, of a publicly traded company, you should handle yourself in a certain way. And if you can't do that, pay someone else to do it for you. But this is the second time Bumble has literally hit the measure move perfectly for the breakdown first of our descending triangle rather, and then now for the breakdown of our ascending triangle, which should have been a bullish pattern 66% of the time. But it was very clear, in my opinion, this was getting ready to break down. I was very clear about this for literally weeks, how I was expecting this to happen, and then finally got that perfect trade right after I made the video discussing it. So once again, pays to pay attention. And I mean, we've been crushing these moves. I can't even tell you, in the last month or two, we have literally called out, predicted, charted, put trade setups in place for probably 20 stocks that had over 10 to 40% moves to the upside in 1 to 3 candles. So if you're not paying attention, it's time to start paying attention. If you got friends, if you got family, if your dog likes technical analysis, please share it with them as well, as obviously I am always trying to grow the channel. Baidu is next. Nothing has changed for me on Baidu. Still do not like the situation of China currently, as far as the way that the economy, stock market, housing market, etc. looks. We have confirmed into a bear market since September. And I think we're going to see continuation to the downside. While we are slowly putting in higher lows, this could potentially be building an ascending channel, but we know that the ascending channel will probably just push back up to 200 exponential and then break and continue to the downside. Baba. So we discussed Baba. Basically, we were expecting us to come back down here and put in a potential right shoulder for the inverted head and shoulders pattern. We basically kind of undershot that target slightly. So that's always a good thing. When you see the right shoulder come down and it doesn't come down as low as the left shoulder, that is typically bullish and means that we will probably see a more powerful move to the upside. Does that have to happen? No, we could easily come back down here lower. It could easily break the pattern. But if we can get back up here to our neckline at 180, I do expect us to get the measure move at least probably back to the retest what was support but is now resistance of our breakdown for the descending triangle. So that gives us our trade setup that is currently in play. We have a 14% stop loss if we take out the head down here. We have a 29% target to the upside, which would be the retest of a 200 exponential on simple, and a slight underperformance of the measure move. It's over a 2-to-1 risk reward ratio. Obviously had the perfect measure move play out to the downside. So, it would not be unrealistic to think that we get the measure move play out to the upside. We are seeing momentum in our favor coming out of the bearish control zone. I do expect this to move, but potentially underperform, even though it's overall looking decent for now. 10-cent music. Not a beautiful looking chart here. Obviously very bearish, well below the 200 exponential on simple, but the reversion to the mean play is definitely there for a move back up to 1238, potentially as high as 15. And that's going to give us something like a, anywhere from a 40 to 60% move to the upside. So is it time to put a trade setup in play on this one? Well, we've crossed the 821 back to the upside. We found support at that green, trend line that we were expecting to find support at once again. Put in what looks like a double bottom bullish divergence between those 2 points. So, at what point in time is this thing confirming that we're getting a nice little move to the upside? Well, I would say if we break down below this support level for our little consolidation right here. You know, we definitely want to be out of this as it's going to look like it's going lower. But if we get the break above our resistance here at like 936, it's going to look like it's going higher. So do we get a decent trade set up? About 1.75 to 1 because we have such a heavy stop loss. And then if we get the move back up to the 200 simple, we're looking at about a 57% move and a 3 to 1 roughly. So there's definitely a potential trade setup to be had there. I would rather wait, see it consolidate and build a new base and then have a tighter stop loss. But at this point in time, it does look probable that if it can clear this 932 level, then we're going to get somewhere between a 30 and 50% move to the upside. So nice little momentum trade followed by continuation to the downside. Diddy, basically just consolidating in the lower half of this range. We have a very clear resistance in place at $10. If we get the break of $10, it's going to look like we'll get the move back to the upside of like $13. But more likely than not, we will get rejected and just continue to trade inside this range. So as far as I'm concerned, we're at the top of the range and less likely to break through. So I think it's more likely that we see Diddy back down at $7 than it is we see it above 10. BZ Kanzun Limited finally got the break of our what amounts to a neutral flag pattern, or neutral triangle, symmetrical triangle, whatever you want to call it. The break above that key level at 36.27, the break above the resistance at basically that same area as well, tells me that we're more than likely going to see continuation to the upside. I would expect at least an initial target with the retest of that previous high right there at like $42. So I think we're going to get the pushback up to $42, at which point in time we'll probably see a consolidation and potentially a breakdown from then, potentially new highs. We'll have to see. It's probably going to have something to do with the earnings call. But again, not overly optimistic on these Chinese stocks. Most of them, I'm looking for a counter trend reversion to the mean play. JD.com. So far it's doing exactly what we said. We had the blue box in play for an entry down here at 76. Now we have gotten the pushback up to the upside. I do expect it to top out somewhere around 88. I do expect it to build a third potential drive of a bearish divergence. I say that because we have a high here. We have a much lower high here. And I think we will get a third lower high here as well. Is it going to come up and hit like an actual trend line? Or is it just going to be a lower high? Who knows? Who knows? But I think that we're more than likely going to see a third drive of bearish divergence followed by a rejection and then breakdown of this overall pattern. Now, you could argue this is some mutilated, weird inverted head and shoulders pattern. We did find support on the 200 exponential, so technically should be bullish. It is possible we get the break up and retest of the previous all-time highs at like $108, but I think more likely than not, we're headed back down to the lows at like 65. But I think something like JD, if let's say China's economy is bad and takes a turn for the worse, or it becomes evident that it's much worse than they're saying, I think something like JD is going to do better than something else like Alibaba, for instance, because I think regulation will be less of an issue, etc. So NIO is next. Obviously, Chinese car company, EV company, basically just flagging out here, at least for the meantime. We have obviously touched the low here, the high. We've put in a series of lower highs and a series of higher lows. We're back at that top range now. So I think more likely than not, we're coming back down to like 35. But we'll have to see. This is basically just flagging out. And overall, this should be a bullish pattern. I do expect further move to the downside. And as far as I'm concerned, this is extremely risky. EDU currently in the trade on EDU. No surprise to you guys. We're basically at my entry now still. Basically just been going sideways. Time decaying all the poor people that are using options on this. But still back above the 821, looking across back to the upside. We have exited the bearish control zone. We're looking to get the hard buy and cross. We have momentum in our favor. We're above the zero line. We have some green histograms. I do expect this thing to come back up here, fill the gap, and get that retest of the 0.5 in yellow/orange or the 382 to 236 in green. I'm expecting a 162% move to the upside with a 25% stop loss in play, giving us a roughly 6.6 to 1 risk reward ratio. So definitely looking for a big powerful push up here in a short amount of time. When that actually pushes up, I don't know. We've obviously run into quite a bit of resistance at that 250 level as we topped it here. We topped it here. If we come back up to it again, it's going to look like a very clear ascending triangle, which again should typically be a bullish pattern. And while I'm overall still bearish on this as we're well below the 200 exponential on simple. A small little, reversion to the mean, retest, and attempt to break back to the upside is going to give us almost a 300% move to the upside for a retest of 200 exponential and simple. Probably one of the best risk reward scenarios. Matter of fact, because I did not release on the channel the video that discusses the 10 under 10, which have all been performing, most of them have been performing extremely well so far. We'll just touch base on this real quick. We'll see back here the previous 2006 to 2007 high. We came up here and started to form basically like this red kind of arching resistance pattern. And we see a very clear blue support line here. When we broke down from that support line, if we take a Fibonacci from the low here to the high here, we came down exactly to the 618. And then that started to form our blue arching support line here. So now we have two touches, broke back up, came all the way back to the top of the range. So again, we see that aggressive breakdown from our little ascending triangle or ascending wedge. We see the breakdown that forms our support here, and then we see a same high double top, come back down, put in a higher low, and then we see new highs. So then we start to form a similar pattern out of this larger move as we have a giant ascending wedge pattern taking place from 2007 all the way to 2021, at which point in time we hit a high, and then we see an aggressive breakdown from that high based on Chinese regulation, etc. Obviously, this is New Oriental Education and Technology Group. The balance sheet of this company is nice. The revenue of this company is nice. This was a regulation FOMO dump or FUD dump, whatever you want to call it. But now if we look at from the low down here to the high right here, we'll see that the sell-off was exactly down to the 618. So again, we had a breakdown here to the 618 and then eventually saw new highs again. So, am I overall aggressively bullish on this in the long term? Well, it looks like we're carving out a bottom right now. We're very clearly inside the bearish control zone on the monthly. We're seeing only red histograms on the monthly, so I don't want to get overly bullish on this just yet. It looks like we're potentially going to be carving out a bottom here, seeing that retest, but potentially getting a retest of the previous all-time high, which is an 800% move to the upside with a 25% stop loss, giving us a 32-to-1 risk-reward ratio. So, again, this could take a couple years to play out. It could take a couple months to play out. It might never play out, but, I like my odds. I like my odds. So there's a little treat for you guys that are not in the group and one of my overall most optimistic targets and potential trade setups. So, and remember, if you're just tuning in, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. TSM continuing to Taiwan Semiconductors, continuing to just trade inside of that range. Got the move up from the low. Already had that 8.5% play out. 15% total to back to the top of the range. I expect this to continue trading inside the range and eventually, something to happen with China and it to break down. I think, this is obviously a focal point for, world conflict right now. Is Taiwan going to be the next Hong Kong? Sure, it probably is. It probably is. I think China is going to reabsorb Taiwan into their system the same way that Hong Kong was reabsorbed. Will it be through war? Will it be through peace? Will it be through, I don't know. I can't see the future, but I have a strong feeling that when that happens, this is probably going to aggressively break down to the downside. And, I think that we're going to see a very clear shift from Taiwan Semiconductors into other actual countries, creating or branching off companies that are existing or creating new companies and foundries over the world. So if one thing has been exposed, it's basically that, this whole semiconductors from one single place on the planet having like 90% of semiconductor plus production is not good. It doesn't work and could create some serious supply chain issues, which obviously we're seeing in all the electronics, in everything. This has been the main issue in my opinion. So, well, obviously Taiwan Semiconductors, but semiconductors in general. AMD still very strong. We are seeing the sell by sell. They're spaced out a little bit more. We're still inside the bullish control zone. Bunch of green histograms in a row. Very strong. Definitely has momentum in its favor still for now. But I am cautiously optimistic on AMD. It's just a slightly worse version of one of my favorite stocks, Nvidia. Obviously been absolutely crushing. No secret that I have been hardcore telling everyone they should be involved in Nvidia. In my opinion, if you don't currently have a position in Nvidia, is now the time to enter? No, probably not. But is it going to see continuation to the upside? Yeah, probably. But I personally would wait for a pullback but obviously I'm not your financial advisor. You know, I was pitching this thing hard at like $200 back here. I was pitching it hard basically through the entire bull market to the upside. I've been a strong proponent and believer in semiconductors, and obviously they have performed extremely well. Speaking of semiconductors, and the one that I've been consistently talking trash about because it is a trash bag piece of shit company, Intel. So Intel is total garbage. If you don't know why I always say that, we can take a quick little look here. Intel is total trash. It topped out back in 2000 and basically still has not reclaimed the previous all-time highs. So 20-something years later and the most epic bull run, and Intel is still not making new all-time highs. And then if we just zoom in here at these three peaks right there, we see a high right here. We see a higher high right here. And then we see the same high right here. We see a high right here, a lower high right here, and a lower high right here. We see a high right here, a lower high right here, a lower high right here. This is triple bearish divergence on Intel on the monthly chart. This thing is going to get absolutely destroyed when that bearish divergence plays out. Is it about to happen? Probably. You know, I think Intel is coming back down to the 30s. I said that when we were in the 60s, that we would be back in the 40s very soon. And then we got this capitulation dump, the rejection, the, you know, breakdown of the 200 exponential and simple. I think very soon this thing will lose another 25% to 33% of its value, and it will be down in the 30s. And I will make a video after that, and I will say, told you so again. SMH semiconductor ETF, obviously doing very strong. But, you know, in my opinion, if you can't decide on one, go with the ETF. If you're going to pick just one winner, go with, you know, NVIDIA. But that's just how I feel. Or maybe a little bit of both. Why not both? ARKK still doing absolutely nothing. ARKF still doing absolutely nothing. Slightly more bullish, able to somewhat chop around between the 200 exponential and simple, forming what amounts to an overall bullish pattern. The ascending triangle, we have a very clear resistance here at $54. In the event that we do get the break of $54, I would expect the measure move to take us back to the previous all-time high, somewhere around like $64. Do I think that's going to happen? Probably not. But this is an overall bullish pattern that typically will break to the upside 66% of the time. So 34% of the time it goes much lower. 66% of the time it goes higher and hits that measure move. So is it double top and then go lower after that? Who knows? Does it go to new all-time highs and Kathy Wood is a genius? Who knows? Skills, SKLZ, got that retest of our breakdown level of 1254. Still have part of this position open for now. We'll see how it plays out. But as far as I'm concerned, you know, we got our measure move. God, there's a lot of crap going on right now. What is going on right here? Okay, let's get rid of this one really quick so we can see a little more clearly. So we had basically our 43% move to the upside play out already. I do expect this to potentially top out right here, come back down, and then re-enter off of that $10 level. But it is possible we see the continuation now to the neckline, and then we get the break, and that break gives us a 76% move to the upside, the reversion to the mean, the retest of 200 exponential and simple breakdown. Does it have to happen? No, but looks okay for now. Definitely starting to see some toppy signals here. You know, could see an easy rejection, could see us come back down, put in that right shoulder, and then see the continuation and break to the upside. That's really what I'm looking for. Maybe it bursts to the upside now. Maybe it rolls over and goes to zero. But I do still have part of that position open. Obviously has been profitable already and will most likely be even more profitable in the future. Teledoc. Yeah, I mean, we got the reversion to the mean. You know, the retest of the 200 exponential. Didn't quite get to the 200 simple. You know, this thing looks weak. Could it see? Oh, man. I don't know. There's way better setups than this, in my opinion. Way better setups than this. So Palantir, obviously been, you know, talking about Palantir. Everybody got bullish when they bought a bunch of gold. All the gold bugs were like, see, Palantir knows something. They're analyzing information. They bought millions of dollars worth of gold. They're bullish. The Black Swan event. Let's keep in mind that Palantir's balance sheet is in the billions, and the amount of gold that they bought is in the, you know, tens of millions. So it's literally a fraction of their balance sheet. It's like if you have $100 in the bank and you go out and spend $1 on gold. So let's not get too overly bullish. Obviously, we're putting in what amounted to a bullish pattern, an ascending triangle. There was potential for a break to the upside. The initial push up here failed. We saw a double top, come back down, retest to the bottom of the range, the 200 exponential and simple. We have now broken down below the moving averages. And if we do get that measure move break to the downside, I expect an initial stop at $20, and then continuation to at least the 618, like 1650, and potentially 786 at 1250. Does it have to get that low? No. I'd be looking at these key Fibonacci levels though for support. We could easily see a retest back up here and reclaim this level and then continuation to the upside. But as far as I'm concerned right now, Palantir is not looking hot. And I think there's a more than 50% chance that we see Palantir at like $16 or $17 again in the very near future. UBX, still a trash bag company that literally does nothing, makes no money, and has no products. But we are seeing the 8 and 21 cross to the upside. We did see a pushback up here, an attempt to come back up and retest the 200 exponential and simple. Do we see continuation? Probably do short term, but overall, still bearish on this. I think we're probably going to chop around here or put in new lows in the near future. Unity Software, been banging the drum on this one forever since the retest of the 200 exponential and simple. Obviously extremely bullish. Trade setup played out very nicely. Do still have portion of this position open. I was obviously, not nearly optimistic enough on this one as we had a 20% trade setup in place. Did take some of the profits along the way back here. And now this thing has absolutely just blown to the upside. We do have the measure move target and the, basically measure move of the channel itself to the upside and the 1.236 Fibonacci extension at like 215. But at this point in time, if we see a consolidation and continuation, I think we're likely to reach the 1.618, which is $295. So you could say that my mid to long-term target is the 1.618 Fibonacci extension at almost $300. We're at 200 now. So that is still another nice little 50% run up, and obviously got a beautiful entry on that off the 200 exponential and simple. Very, very bullish. Very good company. Crushing it. Corsair, we have the current trade setup in play. 20% move to the upside with a 8% stop loss. Didn't quite get all the way down to the target, but I did like the 821 cross right here. Over a 2.3 to 1 risk reward ratio. Not exactly a crazy move. 20% for the retest of the breakdown in yellow at that key resistance was support level at like basically $30. And then we have the 200 exponential and simple. Like to see this reclaim those levels in continuation to the upside, but more than likely gets the pushback up here, gets rejection, and then we see a lower target. But overall, still looks good, still in the trade for now. Zoom is next. Zoom taking out the low once again, a new low. This thing's just been getting crushed forever, still getting crushed. Every time it looks like it's going to try to rally to the upside, it fails. Arguably tried to save the 200 exponential here and simple here and then failed, gap down. So do we get the gap close and the pushback up to like 337? I think eventually we do, and it's going to be, a nice little like 20-25% push up here, but I'm not seeing any signs of bottoming yet. I do like that we are potentially going to develop some bullish divergence here. We see we have a very clear low here, and then we have come down much lower than that. Now we're not seeing a low yet, but I would expect this slope line in blue to act as support when we come down to it. But we are in the bearish control zone. We're well below all the moving averages, and not the time to catch a knife on this one, as it has been literally going sideways to down forever, for as long as we can remember. So Square breaking down from the heart line of the channel. It's basically just been chopping around in, lost our key support back here, flipped over the 821 bearish. We saw the initial, buy off the heart line, off the green box, off the 200 exponential and simple, came back up, put in another lower high. I did not enter this trade, but, was expecting essentially this to happen. We have now broken down. We're retesting those lows. I'm looking still for a target down here at like 191, at which point in time I'll take a stab at this thing for the retest of the 200 exponential and simple. Should be a nice little 20% move back to the upside, but I'm waiting for it to get back down here to like roughly 190 to 200. PayPal, so once again, got the breakdown as expected. Basically put in our double top right here, came down to support, and then just got crushed. We do have the potential trade set up to fill the gap, but I did not take it. 3% stop loss, 10% moves to the upside, 3-to-1 risk reward ratio. I think it probably does fill that gap. Looks like it's trying to carve out a bottom here, at least short term, but I think it pushes back up here, gets rejected, and then breaks down. I want to see this thing stop and find support at key Fibonacci level. Right now, we're just basically finding support at those previous little double tops back here from 2020, and I don't think those will hold long term. And if we do get that breakdown, this is just the measure move of the channel that we were trading sideways in this whole entire time. So I essentially think that we'll come back down here somewhere. I mean, we'll see. My initial target, I think it's going to stair step down. 185, then I think 160, then my overall target is like the 135 range. So could take a while to get there. Maybe it never gets there, but that's what I'm paying attention to. Obviously, you guys know how I feel about PayPal. Long-term bullish on it. I was expecting a miss based on eBay numbers and everything, but apparently they closed the gap with like some of their like buy now pay later stuff. But we'll see how that works out for them long term. eBay, another one, obviously very bullish. Had a nice little trade setup play out here for that 20% move to the upside. We'll see what happens next. I'm expecting this green line support to hold, whether we just go sideways to get there, whether we sell off to get there. But I'm looking for a nice little re-entry, somewhere around like 66 bucks. If we start to carve out a bottom and it looks like we're not going to hit my target though, I may take a momentum trade back to the upside. But I'm looking for like a 17% move back to the upside. I do expect eBay to be strong through the holidays. So I am looking for a re-entry on this, but not going to just jump back in until I see something. But I will keep you guys up to date as I do on what I am doing. Amazon, again, back here at resistance, still waiting. We basically double bottomed off of the heart line right here. I did not take an entry. I'm waiting for it to come back down to the bottom of the range. I want to see Amazon back at 28.80. If it doesn't get there, maybe I'll buy into momentum on a breakout consolidation and continuation play. But as far as I'm concerned for now, I'm looking for Amazon somewhere around like 28.80, somewhere around there. Not looking to just buy the top of the range that it's been trading inside of for. This has been since July 2020. So almost a year and a half at this point in time, sideways. And we're at the very top of the range. So is now the time to short Amazon or is now the time to long Amazon? One would argue it's time to short it. But I don't know. What do I know? I'm just using technical analysis that works consistently over and over and over. And I have proof because there's a YouTube channel where you can go back and watch everything I say. Facebook, aka Meta, the metaverse, Mark Zuckerberg's company, is it carving out a little inverted head and shoulders right here off the 200 exponential and simple? Looks like it. Looks like it wants to push up here. My initial target was 352. We didn't get there the last two little pushes, but this really does look like an inverted head and shoulders. It's fairly symmetrical too, so the probability of it actually playing out looks at least decent. If we're going by like just the closes, we're basically looking at like something like this. And then, obviously the measure move, if we just take from the bottom of the head to the neckline itself on a breakout, and that's going to take us basically back to previous all-time highs. So, what is this? Maybe like Mark Zuckerberg gives you some cool like NFT if you sign up for, them to put a microchip in your brain and permanently a part of the metaverse. I don't know. I don't know what their pitch will be, but what does it take it back up to $381? Probably does. Probably does. So get ready to sell your brain to science. But I would obviously never take that trade, nor would I ever purchase Facebook or Meta ever, because I have my own morals, and that's where I draw the line. I draw the line at Facebook. Google looks good. Basically just at all-time highs, just melting up here. Google's great. YouTube's great. You guys know how I feel about them. They're the best. And I'm not just saying that because I'm on their platform and I don't want them to cancel me. But you're the best. Maybe I'm kind of saying it because of that. Microsoft, again, just crushing. AbsoluteCrushDaddy.com. The crushingest crush to ever crush. I literally have been talking about 5 companies all year and how great they are. Since I made this channel, since anyone was even interested whatsoever in stocks. If I was going to buy an asset, what would I want it to look like on a long time frame? Probably that. Probably just a constant melt up, no matter what. So how do I feel about Microsoft? Still good. Still looks good, guys. Still looks pretty good. So yeah, let's keep on rolling, baby. What do we want to do? Okay, let's do our cryptos. I'm gonna cut today kind of short, guys. Hour and 24 minutes. I'm gonna try to finish this up in like 40 minutes. So trying to stick to more like the 2-hour streams. And then that way I'm a little more motivated to do like the shorter videos throughout the week. So Bitcoin futures, basically just chopping around up here. Obviously the weekend, so nothing was happening. We did put in a slightly higher high. We do have a slightly lower low. Is that going to amount to some bearish divergence on the daily? Possibly. Still looks very bullish. Still above the moving averages. Finding support. Consistently moving to the upside. Still looks good. Spot market, Bitstamp daily. Basically the exact same chart. Nothing has changed here. Again, we do have bearish divergence between these 2 points. So what do I always look for? Well, I look for typically a third high and a lower high on our indicator oscillators. So we have basically a lower high on the Jewel Thief. We have a lower high on the TDMACD. We have a higher high on price action. So we already have some bearish divergence playing out, but I'm really looking for that third drive of bearish divergence. So basically, I want to see the indicator oscillator kind of cool off a little bit here, and then I want to see a new high on price action. But do we get that? I don't know. We'll have to wait and see. We obviously have a high here. We have some resistance at the level we're at right now, but I think we chew through it and put in a new high. I still expect somewhere around like 72,000. Does it have to happen? No. It could literally go to zero tomorrow, but I doubt it. So let's looking at our traditional indicators. First, we have the RSI. Again, we're seeing some clear divergence between those 2 peaks on the RSI, clear divergence between the traditional stochastics, and once again, clear divergence between the MACD histogram or crosses. So again, definitely some bearish divergence. What does that bearish divergence tell us? It tells us that the price action we're seeing on Bitcoin currently is unsustainable. Ethereum looking slightly stronger, put in a new all-time high here recently. Hard sell signal left the bullish control zone, bunch of red histograms, just chopping sideways, but finding some very clear support off the 21 and not wanting to break down off the 8. But we're starting to lose some of that momentum. We have crossed the 200 back above the 200 simple, 200 exponential above the simple. So that does look good, but crypto basically just looks like it's just hanging on right now. We're not seeing any actual strength. It is putting in like some of these. Clear my throat again. Sorry. May need to grab a drink here in a minute, so we'll take a quick break after we do crypto. It's basically just moving up, but we're not seeing high volume. We're not seeing strength throughout the markets. We're basically just seeing a couple things kind of making new highs, a couple things just kind of moving up, but we're not seeing like consistent gains. We're not seeing market-wide rallies. Are we topping out? We're probably getting close to topping out, in my opinion, but I'm not going to sit here and call the top. But I do think it will be somewhere around the end of the year here. Maybe it already happened. Maybe it happens beginning of next year. But I'm a strong believer in the 4-year cycle, and we're at the end of it. So the risk to reward is just not there for me right now. A 100% move up on Bitcoin from these levels, from 65,000, gives us our $130,000 Bitcoin. So that's a 100% move up. Every bear market Bitcoin has ever had in its 4-year cycles has been like a 75 to 90% pullback. So that's like 1-to-1 risk reward ratio. There's nothing there for me. There's nothing good at these levels. Most of these cryptos have gone between 10 and 100x this cycle. There's no other than some short-term scalps, these levels are just not appealing to me. And I know I'm not the only person that bought in the crypto bear market, so I imagine there's probably a lot of people looking to take a lot of profits, whether they have already or they're expecting to. Maybe after they've held for 1 year, people that bought in at the beginning of this year, maybe people that's been in the markets for a while, but end of the tax year, we'll see what's happening. I have a feeling that we're going to start seeing some serious volatility in all these markets come the end of the year as people want to lock in those gains, enter positions, exit positions based on taxes. ETH Bitcoin ratio looks to me like we have topped out. We had our descending little channel right here, got the measure move, topped out perfectly on the measure move, and now it looks like this is rolling over. 821 crossing to the downside. What does this tell me? It tells me whatever happens within the space, that ETH is probably going to short term be losing value in comparison to Bitcoin until we come back down here and retest some of these support levels. And when we get towards the resistance levels at the top of the range, ETH is probably going to top out here. Bitcoin is probably going to top out here in strength relative to each other. But as far as I'm concerned, this is just a big old flag pattern that's been going on for month after month after month. Total market cap, again, just kind of creeping up here, a little indecision at the top of the range. We're at my target range basically for the 1.618 in red. This is the weekly chart. Looks very, very toppy right now, but just consistent melt up. Consistent melt up. Bitcoin dominance could go either way at this point in time. You know, are we going to see a third drive of bullish divergence before a burst to the upside? Are we going to see a move to the upside now? Are we just going to see it roll over and melt down? I honestly can't tell you right now. I'm really not sure what's going to happen with this. It could go either way. Shibonasti, you know, we basically have this giant descending triangle. You know, it is a bearish triangle. We have technically broken out of it just from time. But, you know, we have some key levels just to pay attention to. You know, and again, this thing was like popular for a while. Now people are waiting for it to get listed on Robinhood or waiting for their mom to buy in or, you know, whatever the argument is now. Is Elon going to tweet about it and then it just pumps up? Probably. You know, we'll see. But the key levels to watch for me are the zeros and then a 6-2 and the zeros and then a 7-1. So those are going to act as resistance if we get up to them. And the key level to look at for support is going to be zeros and then 4-8 or that 2-3-6 based on that previous all-time high back here, which is basically a bunch of zeros and then a 4-7. So, but I do think, again, the risk-reward ratio on this is not good. Not good. There's some other shitcoin with a very similar name that's probably way more popular than the one with literally the largest circulating supply in existence that has the hardest time ever gaining value. If your argument for owning Bitcoin is scarcity, your argument for owning Shibu is literally the opposite. It is the least scarce thing ever made. There are more Shibu Inu coins in existence than there are grains of sand on all the beaches in the world combined. Literally. Not literally. Figuratively. People always say literally, but they mean figuratively. So figuratively, Shiba Inu is the shittiest coin ever made. But also probably literally, to tell you the truth. So Matic, basically just carving out this channel. Had some nice trade setups play out with this. Potential entry here off of this support for a move back up to the top of the range or potentially new all-time highs. Does it get there? I don't know, but you know, the risk on this when we come back down to the same level, that was resistance, 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 resistance. Do I expect it to act as support? That's 618. I really do. I think an entry off of this level, at least for a, let's say we don't get the big boy trade out of this. Let's say we just get this itty bitty trade back to the top of the range. And then if we break down on a close and break down from this level here, a 5% stop loss with a 34% move to the upside. Oh, I probably just messed up that trade setup, but who cares? Let's get it out of the way over here. Okay, yeah. So yeah, this is what I'm paying attention to right now on Matic, and actually, I'm gonna take this one because once again, this looks good, and this thing has been just great for these quick little moves. 34% move to the upside, 5% stop loss, 6.75 to 1. You know, obviously depends what Bitcoin does, but we see the stochastics, or I'm sorry, we see the stochastics. We see the MACD rounding out. RSI not telling us much, but basically at the neutral level. So I think realistically this acts as support once again. So we have the 618 and our potential entry at like 1.64. And we have our target to the upside at roughly 2.33. And again, we're looking at like a 42% move to the upside and a roughly it's like an 8-to-1 risk-reward ratio, so Matic looks good. Solana obviously hit our previous little trade setup, nice little 20% move, came back down, found support on the 21. Looks okay. Hard sell, bunch of red histograms. Looks like a bullish reset before this goes higher. But way overpriced, way over fucking priced. It was $40 a few weeks ago, and now everybody's like, it's amazing all of a sudden now that it's 300. XRP. Still trash. Chart looks okay though. Yeah, I mean, we're basically just this little ascending channel. I mean, if it breaks down from the heart line here, my target to the downside is $1. If it breaks up to the top of the channel again, my target to the upside is $1.38. So, you know, what is that? 40%? Oh, no, I'm sorry. 20% move in either direction. but a coin toss as far as I'm concerned right now. Basic attention token looks like it's just flagging out after that amazing 100% captured move right there. Definitely took my profits up here at like $1.40. Nice little move again. And now here we are just consolidating. Looks very toppy though. It looks like the MACD wants to roll over. Looks like stochastics, they look neutral. And so does the RSI. But looks, the RSI sort of looks like a descending triangle. Lower high with the flat bottom. Stochastics looks sort of like a little double top action right here. And then obviously, we see some divergence on the MACD histogram. And it looks like this thing's ready to roll over. So is BAT about to just let go? Yeah, it's probably going to $1. Probably going to like 95 cents again. But, basically just chopping around. It's going to look like a descending triangle if it goes back down there. But I will probably take a re-entry off of a nice pullback on BAT. Link. That stinking link here. Definitely a potential trade setup for a 25% move off of the 618 in yellow here at like $31 with a stop loss like 10%, down here at like 28.50 and a target to the upside at like 39.86. So let's say $40. With a larger trade setup, retest of the all-time high, 62% move to the upside, 10% stop loss with a 6.2 to 1 risk-reward ratio. Looks okay, but definitely looks like it's rolling over. But is this just going to be a bullish reset before we finally get that move to the upside? And people are like, I love Link again. It's amazing. Probably. The Link cult is quiet, but soon they will rise. Polkadot. You guys know I obviously took profits on the Polkadot setup back here before that dump. I was potentially looking at a re-entry after that trade setup played out. But this to me, we have a giant ascending channel and we have basically just sideways chopped out of the channel. So we either reclaim this channel and then I'm going to re-enter into another trade expecting new all-time highs. And I have a couple different targets here based on these fib extensions and back at the top of the channel / the heart line for like 31%, potentially 53%, potentially 93%. Or if we don't reclaim those levels and I don't enter that trade, I expect this thing to just roll over. And potentially, I think we'll find at least temporary support at this little level right here. So $40, but after that, it's like 32 and 26. So we'll see what happens. Looks sort of like a bullish reset for now. I don't like that it's kind of losing this level now, but overall, it does look like it's going to reclaim it and burst through the upside. It's going to burst in your mouth. Uniswap, Uni. Reverse. Still looks terrible. I mean, we had that inverted head and shoulders, and then it's just been going sideways. It's at support now. So is now the time to, enter with like this trade setup right here? I mean, it probably is, but this thing is just another underperformer. These coins that were early in the bull run, like super popular and great, are now just like out of favor. Nobody remembers them. They haven't even gone up 1,000% in weeks. Who cares? What's Uniswap? Who cares? I'm all about Rocket and what are the other new ones? All these other tokens that nobody's ever heard of. Safe Moon. I'm all about that Shiba Nasty. I'm all about the Kitty Coin. What's Uniswap? Oh, it's a functioning decentralized exchange. What? Who cares? Is it an NFT? I don't care about Uniswap. People are stupid. This bull run's like out of control with like this stupid rampant speculation. But I mean, it goes on longer than we expected to, obviously. CKB, pretty much done nothing. Obviously, we got overshot that measure move. This was an absolute beautiful breakout. I had target up here at like 2.6 cents, and this thing went all the way up to like 3.3 cents. Absolutely crushed it, 45%. Quick move to the upside. Now it's chopping around, putting in what amounts to just another flag. So what is it going to do next? Probably just burst to the upside again. Looking kind of tired, but I mean, it's a couple pennies, and people like penny stocks and penny cryptos. So realistically, it's probably going to like 3.6 cents, but danger zone for sure. FTT token got the breakdown, 821 across the downside on the daily for the first time, literally ever. putting in lower lows, not good. It still has quite a bit of support that it's hanging on to, like some of these other levels. I'm going to go ahead and ditch this. We did break down from that, but we should find at least some temporary support at like some of these other levels we kind of chopped around in. So where we're at now, basically, potentially $52. But this thing's starting to show a little weakness. But, you know, I'd be looking for it to potentially like carve out a bottom and then see some kind of retest for a lower high. But it doesn't look great right now. Definitely losing momentum. Cardano had that nice little push out to the upside after the breakout of this descending channel. Charles like put on his nicest sweater and got on for a live stream and told everybody about some mythical thing that was going to happen soon and why Cardano was going to be great. And then it just bearishly engulfed, took a big dump right in your mouth, and now it's right back to where it was to start with. Is Cardano a total piece of shit? Is Charles Hoskinson a scammer that wears dumb sweaters and streams too much? I would say yeah. I would say yes to all those things. So, yep, Cardano still looks like trash. Remember, this was like leading up to Gauguin. Well, Gauguin's going to change the world. It's going to throw Ethereum, and then Cardano rules the world. And then what's happened since then? It's only went down. So, buy the rumor, sell the news. Don't listen to Chucky. Halloween is over, Charles. FTM. Looking like it's about to lose these levels. 821 look like they're about to cross the downside. If this thing lets go, it could get violent. Got to be real careful with this one. If it finds support here, it could easily burst to the upside and have a nice target. If it breaks down from here, I still think $2 looks like the target to the downside. So now the shitcoin companies. So we have Coinbase first. We have our megaphone pattern. We hit our target to the upside literally perfectly. The retest of the 618 and then the 786 came back down. It is finding support at the breakout level. Does it see continuation now to the upside? Probably not. Leaving the bullish control zone, hard sell signal, a bunch of red histograms. Big miss. But Coinbase is great. Man, I don't care. The actual company is a total shitbag company. They suck. The exchange sucks. They have one job and they suck at doing it. But they're making more money for sure. They're growing their shitty company, and it's still shitty. Bullish. That was sarcasm, in case you can't tell. Baidu. We have a 60-something billion dollar company that can't do the one job that it has. You think that's bullish or bearish? Bullish. It's the future. It is the shitty company of the future. I agree. It is a shitty company, and it will still exist in the future. Correct. Baidu had that pretty heavy pullback. There's still not much we can look at on this. It's just going to, it's probably going to burst up here based on the little move that Bitcoin got, but it's so gappy and it's not being traded. There's really nothing we can do with this. Honestly, we got to wait for some more to develop on that. Robinhood. Okay, so I am still in this trade for now. We're basically at the stop loss area. I'll probably just add a little if it goes lower, looking at like a key Fibonacci extension to the downside. Could just take a couple % hit and get out, but I think this is a decent value now. It's basically at the lowest lows it's ever traded at, showing some bullish divergence potentially. So if we get back up here and it starts to pick up momentum and get the 821 cross, I will probably add to this position. But if it breaks down from here, it's not a very big position anyway. It's not like I'm going to go broke because I invested in Robinhood. So plus if it lists Shiba Inu, then they'll both go to the moon. There's a petition with millions of people that want Shiba Inu listed on Robinhood, and if you list it, Vlad, we'll be your best friend. Vlad be like, I don't know, there's a lot of regulators cracking down on me and I'm paying millions and billions in fines. I don't know, guys. But he'll probably listen. He'll probably cave in. He's like, I'll just pay more fines, but as long as the fines I pay to the mafia are less than the amount of money I make off the stupid plebs who buy Shiba Inu coin and invest in my platform after I rip them off, I still net win. So, okay. MicroStrategy, still a trash bag company, still run by a trash bag loser, Michael Saylor, but overall looks good. Got the breakout of the ascending triangle, retesting it as support, 45% upside potential for our measured move, expecting like an $1,100 price target. But let's keep in mind, MicroStrategy is still trading at $800, and the previous high was $1,300. So MicroStrategy is still down 33%, while Bitcoin is at all-time highs. So why would you ever buy MicroStrategy and not just buy Bitcoin? You wouldn't. You would not. You would not. You would not. You would not buy MicroStrategy. GME, Game Stonkaroonie, almost hit the measure move, didn't quite get there. Basically just topped out here again. Hard rejection candle. Hate to see this. Probably done. Sell by sell. Spaced out decently. Bunch of red histograms. Well above 200 exponential and simple. It looks like it's probably coming back down to like 183. Plus, it's GameStop. It's not a real company. It's a meme stop. A meme stock. AMC, the underperformer of the century, got the breakout. Let's go, apes. We're doing it. Oh, God, no. Mom, I'm never going to leave the basement. Fine, I'll unload the dishwasher if you give me another $20 so I can buy half another AMC coin. Yeah, AMC still looks like trash. Underperform. All the meme stocks popped off to the upside. And AMC didn't. But they're going to take Shiba Inu, so you can buy one popcorn for each Shiba Inu. One kernel of popcorn. Yeah, trash. Looks bad. Looks terrible. I mean, this has been literally dead money now since June of 2021. So since June, it's basically just chopped around. Now, was this range tradable? Sure. But did other things just constantly put in new all-time highs and just constantly just crush while you just sat around holding yourself and your AMC coins? You did. You did. So Newegg obviously had that beautiful trade setup play out. Absolute explosion to the upside, 46% in a single candle. And remember, it's still a meme stock trash bag company. So yep. Bed Bath & Beyond obviously had that overperformance explosion to the upside. Nobody else talked about Bed Bath & Beyond for 6 months. No one even remembered what it was. Giant descending triangle breakdown, the gap fill trade. I was literally talking about this trade setup forever, about how shitty this company is, but eventually it should fill the gap, and then boom, explosive 60-something% move to the upside. Do I think it just keeps chopping around here and then just goes to the moon again, and all of a sudden Bed Bath & Beyond is great again because like they're listing some candles inside other retail stores? No, this company sucks, and it's a meme stock. It's trash. It's a trash bag retail company, and this was literally a meme stock pump. So what's the next move for Bed Bath & Beyond? Down. DraftKings broke down as expected. I did expect there to be some kind of little bounce right here, and then it was just pathetic. Rolled over, attempted to reclaim that area, failed. Back down here, got a lower close. This looks terrible. I expect the remainder of the measure move to play out sometime in the near future. $31, at which point in time, probably look okay. Trash. Sucks. I mean, this is the best case scenario, best possible environment for this to do well, and we are confirmed in a bear market. We are clearly below the 200 exponential and 200 simple. We are clearly trending to the downside, and this thing looks like it is getting ready to let go like a waterfall. Support at $35, support at $29, and then after that, it is literally game over. So I don't know what the news will be when this thing gets crushed and just absolutely capitulates to the downside, but you know, I'm sure they'll be like, we knew it. It was because of this. I mean, those are your support levels. $35.30, $29, and $18. So get ready to lose half your money. Oh, Kathy, why'd you have to buy it? Oh. So metals, gold looking good. Had a nice little week right here. But let's keep in mind, this did not just happen out of nowhere. It was literally the move we've been expecting. So we have our Fibonacci from the top right here to the bottom right here. This was our pushback up to the 0.5. The previous pushback up was to the 618. The one before that was our 786 retest on the way down. So we have been trading very, very technically using these Fibonacci levels even before we didn't put in a bottom. So we got a 618 retest. We got a 236 higher low, okay, forming this flag pattern. And now we got to push back up to the 0.5, lower high, the top of our descending resistance. the Fibonacci level, what do I expect to happen right here? I expect everybody to get super bullish on gold. It's going to the moon. This is it. Inflation. Yay. Finally, gold's going to be its time. It's going to have its day. And then it's just going to come back down. It's going to just come right back down. Okay? So just keep chopping around inside this flag pattern. The flag pattern is bullish. And eventually I think gold breaks to the upside. But does it put in a lower low first? We don't know yet. But it looks half like a neutral flag pattern, which should be bullish, and it looks half like a descending triangle, which will be bearish. So we have to wait and see. I mean, I'm still not convinced that this inflation is going to just last forever and that it's not just supply constraint, because there's hundreds and hundreds of tankers with thousands and thousands of shipping containers full of all the stuff that people want to buy sitting off the coast. Well, once all that gets unloaded and we meet the demand, is the demand going to keep being there, or is the bottleneck going to be gone and then prices come down? I can't see the future, but if I had a guess, I'd say I was the first guy talking about supply constraint since way back when, and bottlenecks, and now everybody's talking about it in the ports and the shipping containers and this, that, and the other, and the inflation, and everybody's scared. Okay, let's talk about something else really quick here. Let's mention, here's another little rant for you guys, okay? What's up, CW? Good to see you, my man. Of course, brother. Thank you for the compliments as well and always being here. Here's a very important thing. I look at M1 and M2, and I've talked about them and everything, okay? And everybody's talking about hyperinflation and this, that, and the other, and they're going to hyperinflate the debt away. Let's remember something very key, okay? The money supply and the velocity of money I've talked about quite a bit, so I'm not going to rehash on them. I'm not going to pull up the charts, but okay. If hyperinflation, if rapid inflation, if regular inflation was going to be an issue, what is the same thing you always see happen 100% of the time in inflationary environments? What is the number one thing that people want to do? The second they get their money, the second they get that currency, what do they want to do? They want to spend it as soon as possible, okay? Why do they want to spend it as soon as possible? Because it's going to buy less goods in the future. Those are inflation fears. Quick, spend your money because you're going to get less in the future. So the sooner you spend it, the better its buying power is going to be. That is literally the mentality behind inflation that begets more inflation, that begets higher prices, that begets more inflation and more higher prices. Okay? So if that was the case, why is the velocity of money so slow? Why is the amount of M2, amount of savings inside of consumers' checking accounts and bank reserves at highs? Why is the money just sitting there? If people are so afraid everything's going to cost so much money in the future, why aren't they spending that money? Why aren't they getting rid of this dollar, this currency, this money as fast as possible to buy goods as fast as possible so that they can get goods before they can't afford them anymore? Why is the money just sitting in everyone's bank accounts? Why is the money just sitting around? Why aren't people spending it? Why is the velocity so low? Is inflation, if this inflation was real, if people were really afraid of inflation, not just plebs, not just, poor people that can barely afford to get by, not just old people that are on a fixed income, and I'm not hating on those people at all. Okay, that's dumb money. Okay, that's your regular uneducated people, not by their own fault, but by the fault of, basically the system that designed those people to be just dumb consumers. So those people, sure, are afraid of inflation because their chicken costs more, because their steak costs more, because this, that, and the other. I can't afford coffee, and there's droughts, and this, that, and the other, and Christmas presents. And sure, I get it. I totally get it. Supply constraint, inflation, monetary, increase in the money supply, and giving people checks and paying people to lay on their backs and pump out as many babies as possible. I get it. There's definitely some inflation from that. But why is the velocity of money so slow? Why is the money moving as fast as possible? You would think that if there was actual inflation that's going to be sustained and last for a long time, velocity would be extremely high. Because what would happen? It's like hot potato, okay? You give me $1 and I give you, a ride in my Uber, and then as soon as possible, I want to spend that $1. So I run to the store and I buy a pack of cigarettes. And then the guy at the cigarette store, he closes early, and then he runs out and puts gas in his tank. And then the guy at the gas station, he takes that money and he quickly runs to the grocery store and buys bread for his family or eggs or meat or whatever. And then the grocery store worker quickly gets that money and they spend it. The velocity would be through the fucking roof. Everybody's trying to spend this money as quickly as possible because it's just worth less and less. If at the beginning of the week, $10 was worth $10, and then the next day it was worth $9, and then $8, and then $7, and then $6, the velocity would be through the roof. Because every time somebody got that money, they would immediately go out to spend it as quickly as possible because prices are rising or the purchasing power of their dollar is falling. Same thing. So why is velocity so low? Why is there so much money? Why is there literally trillions of dollars sitting in people's bank accounts? Well, that's not poor people. That's rich people, and they're saving money so they can buy the dip. Sure. So the smart money is not spending their money in the middle of record inflation when everything's going to cost more in the future. That's weird. So are all the dumbass people buying as much shit as they can as quickly as possible because the narrative is spend your money as fast as possible because there's record inflation and everything's going to cost more in the future? And the smart money is saying, no, I'm not going to buy things at record high prices when they're super hyper inflated. I'm going to put money in the sidelines and I'm going to wait to buy all your shit when the economy crashes, when the stock market crashes, when crypto crashes, when the prices come back down because the supply chain bottlenecks are alleviated. Are those same people, the same smart money, the same people that rule the country, that rule the governments, that rule the world, are those the same people that are making all the laws that are causing supply constraints by limiting the amount of trucks that are allowed to operate because they're not new enough or up to date, or regulations, or by stopping people from going and working the jobs that would be making the goods that are causing the problems with supply constraints, or driving the trucks to deliver the goods, or unloading the shipping containers that have the goods on them? Are those same people making all the mandates and regulations that are causing all these issues? Oh, they are. So all the rich people are making policies and doing things to make everything go up in price and pump up their own assets while they sit on record amounts of money in their bank accounts, like Warren Buffett and all these other like super smart people that are millionaires and billionaires are, Elon Musk is selling the top of Tesla stock, and all these people are doing all these things. Federal Reserve chairs are coming out and saying, we're going to sell stocks because we shouldn't have bought them and we want to make sure that we still have your trust. Or are they literally just dumping their big steamy bags on your face because you're a dumb poor person and you're less than them, you're worse than them, and you're buying inflated products from them because you're stupid? Not literally you, but I'm saying like the plebs, the sheep, the bah. Think about it, okay? Velocity, all-time lows. Record lows from when they literally started calculating it, okay? Lows. They're creating this money and trying to fill a gap before the capitulation, before the recession, before the depression, before everything crashes. Remember that. I've been talking about it for a while now, and now everybody is super worried about inflation and hyperinflation and all this stuff. But there's record amounts of trillions of dollars just sitting around in banks. That's weird. Isn't that weird? Cash just sitting in the bank because pillowcases are so expensive. I love it, my dude. And again, I'm not trying to conspiracy theory. I'm not calling not one of you guys dumb. You're smart because you're out here trying to educate yourself, trying to learn to do stuff, looking at technical analysis. You're not just watching some idiot who makes a 5-minute video and goes, buy this random penny stock because it's going to the moon. Buy this random shitcoin because it's going to the moon. You guys are watching actual technical analysis. You're looking at fundamentals. You're looking at technicals. You're looking at like the way the actual economy works, the functioning, like all this stuff. You guys are all smart. But the actual regular people out there that aren't interested in this stuff, that aren't involved in this stuff, that aren't invested in stuff, look what the narrative has been. And look who has made all the policies around the world that have caused this narrative to play out. If we didn't shut down the economy, there wouldn't be a shortage of goods. If we didn't give everybody free money to stay home, there wouldn't be an excess of money. If we closed down the economy and gave nobody money, sure, it would have been hard, but we wouldn't have all this excess demand and lack of supply. If we didn't shut down the economy and didn't give people all the money, everything would just be fine. Sure, I'm sure people would have got sick and died. Not downplaying any of that. I'm just saying the policies are what caused the issues. If we didn't shut down the economy, but we did give everybody money, would there be some inflation? Sure, probably. But the closing of the economy and the giving of the monies are two factors pushing prices up. And then on top of that, the policies are stopping the supply chain constraints from alleviating. So you have tons and tons of policies, all caused by the same people that are causing all these assets to go up in value. And then those same people are telling you, quick, spend all your money as soon as you can, because you're not going to be able to afford anything in the future, and there's nothing we can do about it. Okay, sure. I believe you. CW says, my wife calls me an idiot all the time. Damn, I should have left her at Weight Watchers. Bro, don't worry about it, man. This next little push up here on whatever it happens to be, metals or pot stocks or whatever, it'll be wife-changing money, my dude. You won't have to put up with it any longer. Or maybe you keep her and you go Mormon. Grab up a couple more wives. Who knows what the future's going to look like, man? In a Mad Max scenario, when we're all living in the Peter Schiff shaped golden spaceship, spending all our cryptocurrencies, and we're all Bitcoin millionaires in the flying gold citadel, maybe there's, 5 chicks for every dude. And, we're all Mormons. Not by choice, though, to save the human race. But we'll see. That's a hypothetical situation. So silver, obviously we are getting the, basically head and shoulders inverted pattern we talked about here. The little mini head and shoulders that made up the head of the larger head and shoulders. And now here we are breaking through the neckline. We're at the heart line of the channel. And it looks like we're going to get that measure moved back up here to like $28. I'm sure silver premiums will be like $10 per ounce or $12 per ounce. And they'll be, there's a shortage. Andy Schuckman's here. And he says there's no more silver. And you better buy it at the absolute top right before it sells back off and goes back down to $22 again. So, but is this just the reversion to the mean? We're still under the 200 simple. We're back above the 200 exponential. Could go either way. But as far as I'm concerned, silver has literally been range. I mean, not even as far as I'm concerned. It's a fact. Silver has been range bound since July of 2020. So for the last year, it's been range bound. So we're at the middle of the range right now. So there's 50% chance it goes to the top of the range. 50% chance it goes to the bottom of the range. And we're right smack in the middle. Risk reward is not there. Not a good time to buy, not a good time to sell, in my opinion. I mean, not that I actually ever sell any silver. If I'm going to trade actual, paper silver, if I'm going to trade it, I'm all about hodling. Zalzag gold silver ratio looks like it has topped out as expected at the 200 exponential. Are we just going to chop around sideways here and then move back up? I think that's probably going to happen. This looks like a bullish reset to me. We are losing momentum, but I think this is just a bullish reset before gold gains strength to silver. I do expect this to hit somewhere around 82, potentially as high as 90, before eventually rolling over, and then silver just completely outperforms gold. But that could happen literally over like the next 1 or 2 or 3 or 5 or 10 years. It's not going to happen tomorrow. XPT, that fatty platty, got that initial 8.4% pump up, almost here on the 15% trade, as expected after breaking through our descending resistance. Looks good short term still, but very bearish on platinum, overall. We'll see what happens with EVs and platinum in the future and blah, 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 blah. But, the move's done as far as I'm concerned. First Majestic, again, we got those pushes back up on the metal mining stocks. Looks okay for now, consolidating back on top of the 200 exponential, still below 200 simple. This really just going to depend on what the metals do. But some nice moves so far that we have captured. Still looks good. Silver Junior, same thing. Momentum in their favor, bullish control zone, looking good. USAS obviously still in that open trade. This was one of the 10 under 10s. For those of you that are not in the group, we obviously were looking at the long-term trend. We had a key support line down here in yellow that we touched on multiple occasions. Once we were able to maintain that support and get the consolidation above the 786, took that entry. Basically, we're able to reclaim the breakdown of the shorter channel right here, and now we're up a nice percentage on that so far. Can't remember what it's at. Up like 37% on that, so that's obviously nice. There was a second trade setup in here somewhere. The initial target for the first trade setup is the retest of the top of the trend, which is like 69%. So we're about halfway there. So we'll see how that works out. We could easily get a pushback down here. I do think this looks to me like, something like a little inverted head and shoulders, and then we're getting potentially the breakout. But alternatively, this could be the left shoulder, that could be the head, and then we could get a right shoulder back down here. I would look at that as a buying opportunity. Close this trade probably, and then re-enter lower. We'll see though. Still very bullish on this. as of now. That could easily change. But we saw some very clear bullish divergence between some of these points, and now we're seeing momentum in its favor. We're seeing some serious strength on this and already have captured quite a bit of the move. So pot stocks obviously been banging the drum on these bad boys as well. Tilray didn't make it in the 10 under 10 because it didn't go to $10 till like the next day, but it would have been. But yeah, Tilray, all these pot stocks look the same as far as I'm concerned. They're all in the middle of a bear market reversion to the mean. So we have obviously I don't think I have it drawn on this one. I think I have it drawn. Oh no, it's on there. Depending how you draw this resistance in red right here, we basically got the breakout of that resistance, similar to like what Platinum did. Came back, retested it, and now we're getting the move back up. The move takes us to either the 200 exponential or 200 simple. So target on Tilray is like $14 to $17 short term. But the majority of that move has already played out, or at least half that move has already played out. But, obviously playing out nicely so far. The ACB move has already played out, the initial move, which was the break back up to 200 exponential and simple. That was a nice little move right there off of what we called out to be a right shoulder. Remember I put this right shoulder in play before we even came down here, expecting that to happen. So we got a nice buy on ACB down here at like, I think it was like $6 or $7. The 821 crossed to the upside. We broke through the neckline and got a powerful move back up here. We already hit the 200 exponential and simple, but the measure move takes us all the way back up to like almost $10. So again, beautiful trade playing out very, very nicely as of now. Potentially working out what amounts to a left shoulder, head, and then a ugly ass right shoulder, or some kind of like bottoming pattern for a macro move to the upside. But we are at the 200 exponential and simple. We're at resistance right now. Could we see further upside? Sure. But I don't think this is the best time to necessarily be entering, in my opinion. We should have already been in it. We are already in it. Again, not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. CGC is the one I just entered in most recently. This one is so far been underperforming, but we are basically getting that same break of resistance right here. The 821 are flipping back over. We have a trade set up with a 93% target to the upside for the 0.5 Fibonacci retracement and the 200 exponential and simple. This was obviously not in the 10 under 10 as it didn't get to 10, but is the same setup that we're seeing throughout the entire pot stock sector. We obviously see a bunch of bullish divergence playing out from these various pushes down here as well. And now, even if you enter now, this one still has a way to run, in my opinion. And by you, I mean anyone, obviously hypothetically, because this is not financial advice. But 29% move to the 200 exponential or a 48% move to the 200 simple. The problem is now is the stop loss would just be ridiculous. So you'd have to buy into momentum and be ready to take profits or exit this trade with a tight stop loss. Not looking for this to come back down here and take this out because it's already up so much. I mean, beautiful fucking trade though. Crushing. Uranium looking very toppy, still just filling out these triangles. Trade setup has already played out. 77% move to the upside. We did it. UEC was inside of that same trade setup, but again, entered this much, much lower. I'm up like hundreds of percent on these uranium trades, but one of the ones that I'm looking at for long-term gains. Again, though, working out this pattern and potentially at the top of the range now. So looking to buy on a pullback or add on a pullback. Cameco, again, filling out the triangle, getting rejected off of the long-term uptrend. The uranium play has already played out. Our entry on uranium was back at like $10. So we're up like 200% from that. Not looking to add right now. Waiting for a breakdown pullback on one of these potentially bearish patterns in a bull run. Long-term, very bullish on uranium, but short-term, no. 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 You can buy my bags. Copper, just filling out this flag pattern. Basically resistance up here at like $28. Support down here at like 25. Barely getting walked up by the 200 exponential and simple. I think this thing's going to break down to like $24. This is CPER copper index. Next we have lithium. Was I supposed to look at another copper one? Well, it's the same thing, but with different numbers. If I was and I forgot. Damn, I feel like somebody asked me to look at one. Sorry, I'll do it in the group if it was one of you guys. I can't remember. LIT looks very toppy to me. I think I could run, but it looks very toppy to me. Hard sell. I mean, this thing is overperformed. Again, capitalized on this quite a ways up here. Definitely took some profits off the table. I want to say I took them at the 1.5. expecting it to top out there. Yeah, I think I took profits over here. Still have part of that play open. Could still run, but getting very, very pricey in my opinion at these levels. Again, these are long-term plays that I love. Hydrogen, lithium, copper, uranium, metal miners. Love them. Pot stocks. Love them all. Super long-term. Commodities in general. Love them all if the inflation trade plays out. But many of them have already run so much they are dangerously overpriced, in my opinion. Hydrogen, nice little breakout, hit the 1.618. I would like to buy on a dip, please, sir, at $25. We'll see if it gets there. Nickel. I don't think I mentioned nickel, but that's one too. LBS1, lumber, that wood, that hardwood, that walnut, you know what I'm saying? Look, when we were way back down here, expecting a potential bottom, looking for bullish divergence, came back down, perfectly bottomed right here, exactly as expected. Beautiful trade setup, 38%. Beautiful trade setup, 76%. I did not take these trade setups, but expected them to play out perfectly. But I'm just not a witty trader, just not my thing. But we did push all the way back up to exactly our target and then carved out a right shoulder as expected. And now what happened since then? After the reversion to the mean, after wood entered into a bear market, we push back up. We retest the 200 exponential and simple. We get rejected. And now what do we see? Continuation to the downside. What does that mean for the world, for the economy, for wood prices in general? Not good, guys. Not good. We better hope that this wood comes down here and puts in a higher low and then continues to the upside. Because if it doesn't, something seriously went wrong. And the whole inflation argument is going to take a big dump right on all the inflation argument people's faces as we go into a recession, depression, World War III. Hooray! Losing momentum. Flip the slope line over. Looks terrible. Looks terrible. Okay? All right? Horrible. Do you remember people were buying houses and were paying an extra $50,000, $40,000 on the price of the house because wood was so expensive? You don't get your house for years. And by then, wood's trading at a discount. Your house is finally done. They're like, here's $70,000 back because we overcharged you on that wood. Thank you, sir. No, I don't think it works like that. Here, we built you 2 houses because we overcharged you on the first one. The second one is free. Buy one, get one free. It's a Hyundai house. Or no, what's the company that gives you buy one, get one free cars? It's not Hyundai. Kia. Buy one Kia, get one free. How is there buy one, get one free on cars? How the fuck did Kia have buy one, get one free? Are these Matchbox cars? No, sir, it's a real car that you can drive around with an engine that takes gas. Yes, sir. Of course. Buy one, get one free. Sounds like a scam. Caterpillar, reclaiming the 200 exponential on simple. Looks okay. Could go either way. Could go either way on Caterpillar, honestly. We'll see if this trade setup plays out. 10%, 18% to retest the highs. Infrastructure, trying to carve out some kind of bottom. Again, we're seeing a lot of potential inverted head and shoulders starting to develop here. Deer, getting a lot of flack right now. Bad publicity for all these strikes and a lot of shit going down here. So we'll see what happens. Now they're suing the strikers for blocking the temporary employees from being able to come and do the job that the strikers were supposed to do. And now the farmers can't, harvest their crops because they can't get the parts because the John Deere company is too backed up. So all their crops are going to go bad because their tractors are broken and they can't get the parts. That's weird. Because we shut down the economy. That's weird. So when we run out of food, who do we blame? The strikers? The government, maybe? So yeah, just kind of chopping sideways. Overall, slightly bearish pattern, but probably goes higher. Honestly, probably goes higher. Intero midstream, getting that retest right now, as expected, of the previous high. So I don't know why there's a giant stop loss in here. I think maybe I didn't actually put the stop loss in play. Yeah, I guess that's about right. 8.5% if we take out that previous low right there. I would definitely not want to be involved in this. I do still have an existing position, but took profits on a portion of it. But a pushback up to the 786 would give us 25% upside with like an 8% downside, roughly like 3-to-1 risk reward. I think we probably get a better entry on this though, so we'll see. But I am looking to potentially add to this in the near future, depending. Cemex, again, broke down, cannot get back above the 200 exponential and simple. This looks weak. It really looks like it wants to let go. I do still have a small portion of my position, but it's literally just playing with the market's money. There's potential here for this trade setup to still play out, but overall, I think this is a bullish move into a bearish continuation pattern. And what does all this say about infrastructure, the way these look? CLF, not much has changed with this. You guys know how I feel about this. Potentially toppy right here. Sort of just range bound at this point in time. I mean, at this point in time, it's basically a channel with the top at 26 and the bottom at like 20. And we're like right smack in the middle. We're at like 22 of 26. So I guess we're slightly towards the lower end of the channel. I don't like that this is breaking down from support, but if it gets picked up right here, I think we probably do get this like 18% move back to the top. But if we break down here to the bottom, I think we go much lower. We'll see though. This has stayed more bullish for longer than I thought it would. So I may be wrong on this one. Ford, obviously still very strong. I've been banging the drum on Ford since it was like freaking, I mean, what was it? $7? Banging the drum, banging the drum, banging the drum. Here it's $20 now. It's up 200%. And everybody's like, Ford is good. Well, it was shitty at $7, but now it's great at 20. You can have mine. Looks strong though, but looks like it's about to pull back, honestly. GM finally getting a nice little push up here. Is it triple topping? Is it just topping out at the 0 and just range bound? Yeah, it kind of is. Looks okay though. Looks strong, honestly. Underperforming Ford though substantially. Hasbro back at resistance. Still expect this to just chop around. Nice little break off of that resistance. You know, again, if it starts closing above 100 and consolidating, I think this thing roars. It should be strong going into the holidays. It should be strong for Christmas. Works, not looking good. Looks like we're getting that breakdown from support right here. Did not want to see it lose this blue support level. We'll see what happens. I do still have a small position in this right here. You know, I'll gladly eat the stop loss and look for an entry lower on this. Basically just playing with the market's money after we had some awesome rips to the upside here. But in the event that this does get picked up here, 68% move to the upside with 9% stop loss. But if we start closing below this, it's going to really let go. And I do not want to just eat that. I don't like giving back money to the market. That's mine and I'm keeping it. That sphere, we had some nice plays in this, but I really do think we get a lower target on this. It's basically just chopping sideways, but looks like it's getting ready to let go. Still focused down here on the potential inverted right shoulder at like $3. Potentially will take a small position at like 450. But I'm probably just looking to slowly accumulate through this range for like a massive upside target of like hundreds of percentages. Do we ever get there? I don't know. But if we do, 1,000%, I'll give you $1 and you give me back 10. Deal. That's my kind of trade. And then finally, last but not least, Walmart. Again, just coming back up here, getting that top again. You know, a lower high. And then topping out again at that 886 basically. I mean, you could argue that we're putting in some kind of flag or some kind of descending or like ascending triangle. We have a low. We have a higher low. We have the same low. We have a high. We have a lower high. We have the same high. So it's basically just symmetrical indecision triangle. We are staying towards the top of the triangle, and assuming that I'm right about the economy and, you know, people being poor in the future, I think Walmart will do well. I think Walmart and the Dollar Tree will do extremely well over the next couple of decades as the middle class goes down to bottom class, lower class, Walmart/Dollar Tree class. No offense, but y'all not going to be in my way at Target anymore, if you know what I'm saying, because I get the good stuff. But yeah, that's going to do it for today, guys. I hope y'all enjoyed the stream. Definitely, yeah, we went about right. 2 hours and 18 minutes, trying to keep it more towards like the 2 hour. And then expect some little excerpt recaps / mini videos on like particular stocks, cryptos, assets trade setups, etc. throughout the week for just a little bit of like some snippets or some, little mini content along the way. Make sure that you share these with your friends. Make sure that you subscribe on your second YouTube account. Make sure you make your wife, your dog, your cat, your child, whoever subscribe as well. They can just turn off the notifications if they're not interested, but I would greatly appreciate it as I'm trying to grow the channel, which has literally not grown any in the last couple months, even though I put on these long-ass live streams. But obviously, the people don't want the long live streams. They just want the little 2-minute clips that say, buy XYZ ticker because it's going to moon tomorrow or you'll lose all your money. Go all in on Shiba coin. 25,000 views. Hooray. But yeah, that's going to do it for today. Good to see you, CW. Thank you as well, man. Appreciate you. Appreciate everybody that showed up today. Make sure you like, subscribe, all that good stuff. And I will catch you guys in the group. If you are interested in joining the group, you can hit me up. Been a little slow lately, but I understand there's a lot of like macro things going on in the environment. So I totally get why people would be focused on other things like, being locked or in their houses potentially again, or having random mandates to, inject substances inside of their bloodstream that they may or may not be interested in doing, that may or may not actually do anything for them. But, it is what it is. So, yeah, that's it for tonight, guys. Appreciate everybody for tuning in. It is Sunday with our market forward look ahead outlook thingy-mer-dooey. And 11/14/2021. It is 10:21 Eastern Standard Time. I'm Crypto Trend Trader, and that's it for tonight, ladies and gentlemen. I'm out of here.